Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, August 19th, 8:45 a.m., and we are back with another episode of the Market Open. We're almost done with August. We got about 2 weeks left, and then August is officially done. So exciting to see as August ends up wrapping up. But we are here in the last week of August, and we're going to see kind of how August plays out. You know what? You know why I see the delay? So I'm on my iPad right now. You guys probably will see this. You see how it hasn't started yet? What if all this time, every time someone said I was late, it actually wasn't late. It's just because the show wasn't starting on YouTube and there's just a delay from StreamYard. Okay, now we're live. Now we're officially live. There is a 30-second delay, dude. That's a legit 30-second delay. Like someone just said right now, you're late. I've been live for the past 40 seconds. Maybe this has been a StreamYard problem the whole time, bro. Like legit, it was not loading on my iPad. This is why I actually charged my iPad today to see if this thing plays out. Maybe you guys have been gaslighting me for the past year and it's not been me. It's been you. Or it's been StreamYard, I guess. We'll blame StreamYard. But nonetheless, we're here. We're live. And we have a lot to talk about. Blake says, I thought you don't use your iPad. Well, I charged it to see this exact thing today. I wanted to see if there's a little, because last night I felt there was a little bit of a delay. And today it seems like that's confirming my suspicions. Yeah, just blame us. Well, it's better than blaming me for being late. But no, we're here. We're live. We've got a lot to talk about. Palantir, big story of the day right now. Potentially looking at a Palantir that hits $33. We're at $32.73, up 2% in the pre-market. If you really had to ask me what I think is going to happen, I think we see 33 today. I think the momentum's there. And the other reason I think we see 33 today is because we almost saw 33 on Friday. We topped out at 32.75 on Friday. In the pre-markets today, when I woke up, which is around 6:30, we were at 32.91. That's when I posted the screenshot on Twitter. So we like almost got to 33 on Friday. There were 44,000 shares away. In the pre-markets, we're basically ramping up to that. Unless we see a massive sell-off at 33, meaning there's a ton of people ready to get rid of their shares, then I don't know. I think we actually hold 33 or at least try to touch it. And if we touch 33, it's going to be very exciting to see. So we have to talk about Palantir. We have to talk about updates in the macro. There's a lot of different stuff to talk about. Powell speaking this week at Jackson Hole. I have some charts to show on what happens historically in the market after Powell speaks. So we're going to be looking at that. AMD bought a company this morning for $4.9 billion. AMD stock is up in the pre-markets, kind of being described as SMCI for AMD. Like NVIDIA and SMCI are very tight. AMD kind of buying their own SMCI, so bringing the manufacturing of servers and vertically integrating it inside their own company, which might be exciting. And so 4.9 billion is a lot of money. I mean, that's how much revenue, a little bit more than that AMD made last quarter. So, I mean, that's a hefty price to pay with cash in stock. But we'll look at the implications of that. NVIDIA earnings is coming up. We'll talk about that as well. NVIDIA going to be on August 28th. And then, finally, we have to look at the implications around crypto, because crypto, I mean, honestly, dude, I know crypto's still up for the year, but if you bought Bitcoin or Tesla, it's been a weird year. Like, it's been a year where you thought things would really go up. And again, Tesla did have its run and then it came back down, but relatively flat if you look at a majority of the year outside of the past couple months. Bitcoin as well, it had its run after the ETFs launched and then basically flat, if not downward. So both of those stocks have been, or both of those asset classes have been very interesting throughout the rest of the year. I think they both have a run in them going into the end of the year. But that's going to be based on a conversation around rate cuts that we'll talk about as well, because we have a bunch of Fed presidents, including Neil Kashkari, the Fed hawk, and Austin Goolsbee, who's less hawkish, who gave us some new comments this morning about what they think when it comes to rate cuts. Erwin, good morning. Benny, what's up? Matt Money, Silverlife, Mike, Z, thank you all for being here today. Joe says, I'm selling amid wigs per Chad's comment last week. PM me if you have any interest. I did get a haircut over the weekend. My hair is being crazy right now, dude. This hair is absolutely insane, dude. This is what it would look like without the hats. Everyone says I don't get a haircut. This is a haircut, dude. Like, you got the fade on the sides and all this. Like, this is an actual haircut. But yeah, selling wigs, selling amid wigs is cool. I would want to buy one and see how accurate it is. But no, dude, there's definitely a delay. For those that are just joining, we timed it today. I went live and 30 seconds later, I'm looking at my iPad and YouTube's not live, which means there is a delay between StreamYard and YouTube. And when you're waiting for 30 seconds, it means that it's just not showing. I'm going to contact StreamYard about that and see if they can fix it, because that definitely is something that's not good. But maybe it explains why I've been late. Now, if I start the stream at 8:47, 8:48, not 8:45, then yeah, it's on me. But that happens like 0.04% of the time. Most of the time I'm here at 8:45 and we're live and we're good to go. Did you gym? No, I did not wake up at 4:30. So my goal last night on the Sunday show, if you saw, was to wake up at 4:30. I woke up at 6:30. I actually had a phone call though from 6:30 to 7:30. I had to talk to someone in the morning. So as soon as I woke up, I like started working immediately. But I will be going to the gym after this. Because I was not able to wake up at 4:30. I think I slept at 11:30. After the show ended at 10, and then I ended up sleeping by 11:30. So yeah, just not enough sleep to wake up at 4:30. Okay, so let's start off with Palantir. Let's have that discussion. So what happened over the weekend? And I'll be doing a video on this later today, probably coming out at like 6 or 7 p.m. about the New York Times piece. But I do think it had an impact. So Palantir's up 2.21% in the pre-markets right now. Joe Rogan had Peter Thiel, biggest podcast in the world. They didn't talk about Palantir, but Peter Thiel went viral over the weekend for a variety of different memes that he engaged in from the podcast. That is good for overall top-line brand awareness. That does implicate Palantir because people look up who Peter Thiel is. They see he's the co-founder of Palantir. They're like, what the hell is Palantir? And they go into that whole thing. And then you had Karp, who had a rare exclusive New York Times piece done on him. I think it was a very exciting piece. Again, I'll go more in depth on it today in the video, but Karp said a lot of things, and he said a lot of things that I think mattered in the context of what the broader market that doesn't know what Palantir is or is confused about Palantir was curious about. So this was one of the quotes from Karp, just to show you how personal of an interview this is. He says, I tend to have long-term relationships, Karp told me, and I tend to end up with very high IQ women, including some who tell him he's talking nonsense. You know, what was funny is the New York reporter also asked him about a Forbes quote he did in 2013, which is the only time, the quote was, the only time I'm not thinking about Palantir is when I'm having sex. And the New York Times reporter asked him about can you update us on this quote? And he was like, oh yeah, that's before we were a public company. And I was actually allowed to admit that I had sexual activity. So he was laughing it off. It was a really good interview, in my opinion. I was able to cop a version of it, the actual real one. I'm going to frame this and put it up there. I think this is going to be a big deal in 5 years. This is going to be a very big deal. Just like the first full length feature that mainstream media did on Palantir. And it couldn't come at any better timing because the video I put out last week was really about this issue, and I did not know a New York Times piece was coming out. But the video I put out was about the compounding media effect on Palantir, and I genuinely think that is going to, and because I'm in the media business, I kind of have a little bit more experience, and I'm in the Palantir media business uniquely with this channel. Like, the media proliferation is going to be gigantic. Joe Rogan on the biggest podcast, Palantir on a very big mainstream media distribution network like the New York Times. I think more and more people are going to be excited. And if you read the New York Times piece, it wasn't a hit piece. It was a very fair journalistic kind of endeavor into the life of Alex Karp. There wasn't any pseudo or silent jabs at him as a person or Palantir's evil company. It was just a deep dive into what the hell Palantir is and why Karp is such an eclectic, eccentric billionaire. And, they talked about him doing Tai Chi. Like, I think it was one of those reports that people who looked at Palantir, who didn't have any exposure to it, they read it over the weekend. There are still people that read the New York Times, and they were excited about Palantir. And maybe today they're waking up and they're like, all right, $30, I'll buy 1,000 shares and just like get the process started of caring about Palantir. I do think that is going to have an impact. And over the next 5 years, I think the media proliferation is going to be gigantic. So we're going to see how this plays out. Matt Money, thank you for being a member of the channel. He says, let me run my fingers through his hair. He'll say I'm lying. Did you at Vegas? I think you probably did, dude. I'm pretty sure you ran your fingers through my hair. I don't remember, but if I was drunk, you probably did. Okay. Did you see Gerber talking about Karp? Yes. Over the weekend, we put out a video. I put out a video as well on my YouTube page about Ross Gerber and his previous comments about Karp. It was a fun reaction to it because that was the type of media discussion we were having 6 months ago or about a year ago. And everything has fundamentally changed. Ironically, if Gerber just bought some Palantir, like his fund would be performing very well, but he thought Karp was an evil person. And as a result, stayed away from it with a lot of, misinformed takes and has not been able to capture the benefit to the upside when it comes to Palantir. One other thing that's very important. So over the weekend, Go Karp, shout out to him on Twitter. He found that there is a Titan update, $1 to $1.5 billion for the production of 94 Titans. Remember, this is the contract Palantir won back in February. Big deal. Beat Raytheon for it. Solidified Palantir to be the world's first software prime. $1 to $1.5 billion. It's going to run 5 years from 2026 to 2031. Now, Palantir's probably not getting all $1.5 billion, but it's not rocket scientists to think, you don't have to be a rocket scientist to believe, okay, so Palantir got the first Titan contract. They beat one of the oldest legacy prime defense hardware contractors called Raytheon. The only other one that's as big as them is Lockheed Martin. they got the deal. You would imagine that if the government wants to make more of these, they're going to go with the company that has the best software and hardware to effectively create these Titan contracts. And even if Palantir doesn't get all 1.5 billion, they should be able to get an update on the actual Titan deal going into fiscal year 2031. So that's going to be very important for Palantir. I don't think that's the reason the stock is up right now in the pre-market. I think there's some speculation that, people are excited that they could get that contract, but I think the broader investment community, Wall Street, doesn't even know that there's a bid for 1.5 billion on a contract Palantir already got. That's more of retail's research, to be honest. So I don't think it's up because of that. The reason I think Palantir is up right now, I think it's ready for a technical breakout. And I know it's already had a technical breakout. And could it fall back to 27, 28 easily if we have a little bit of market downside? Yes, 100%. That is obviously very possible. However, from a lot of the technical analysts that I follow and what they're looking at, there is one of the most beautiful looking cups and handles on Palantir that exists in the entire stock market. A lot of these people think, hey, now we're entering a zone where the volume shelf resistance is minimal because we haven't been here for 3 years, which means you're going to get a level of price discovery. Now, price discovery is interesting because there's a bull case and a bear case. The bear case is that, well, as the stock starts running to these astronomical prices that people haven't seen in over 3 years, you've got people holding bags and you've got people holding gigantic profits, upwards of 400%, 500%, 600%, especially if the options on Palantir, like if you bought a $15 call when the stock was $8, you're doing pretty well. And so you're going to get a lot of sell side pressure because people are going to want to take their profits. And that's a natural thing that happens. However, if people don't feel the story is done, and the story is just getting started, well, that price discovery results in a ton of new people saying, oh, $32? Well, why not? And they get in, and that just pushes the price higher. I think this is potentially retail FOMOing into Palantir. I think there's definitely a part of the market that believes that retail is getting in right now. They're getting very excited for Palantir. However, I also think institutional ownership, which is now 44.6%. I reported that over the weekend. That might be ramping up because of the idea that Palantir gets into the S&P 500. Now, does Palantir get into the S&P 500? I have no idea. I think there's a chance on September 6th that we are announced. Right now, institutions own 947 million shares, or 44.2% of the stock. Again, I am skeptical about S&P 500 inclusion. I don't want to get my hopes up because I think institutional ownership is lower. I think there's other companies that match the requirements that have a better shot of getting in just because they check more boxes off. But it wouldn't surprise me because if the S&P 500 is the top 500 companies on the planet, or at least in America, and you want the best of the best in breed, if the market sentiment is that Palantir is the best AI company that exists, especially in the enterprise space, which has been, the market's been looking for that AI play that's going to unlock value in the enterprise. Maybe the S&P committee says, all right, Palantir is the one that we're going to accept. So I think it's 50-50 right now, but if it happens, maybe this run is the reason why it's happening. Or maybe we jump another 10%, like CrowdStrike went from 340 to 400 on the S&P inclusion news. Now they've come back down because of the whole issue they had with Delta and everything like that. But it did run on that news. And so we'll see if that happens for Palantir as well. Mark Sheets, thank you for becoming a channel member. Really, really appreciate it. Thank you, Mark Sheets, for becoming a channel member. Okay, so that's kind of the main update in the context of Palantir. We'll see when the market opens. I think 33 is very possible unless there's just a massive amount of selling at that level. However, this gets us into the conversation around Jackson Hole and rate cuts. If we get rate cuts, then maybe 33 ends up being cheap by the end of the year. So let's talk about what's going on with rate cuts. First of all, we have Neil Kashkari, who is the biggest hawk in the Fed. This is a guy who just hasn't, been friendly when it comes to rate cuts. This is what he looks like. You guys probably have seen him on CNBC. And for the past year, he's basically been saying, yeah, there's no chance of a rate cut. Don't expect it. Here are some of the quotes he said this morning. The debate about potentially cutting rates in September is an appropriate one to have. So already he's like, okay, maybe we should cut rates. Then he says the weaker job market should open the door to a September cut. Let me repeat that again. The biggest hawk in the Federal Reserve just said the weaker job market should open the door to a September cut. I think it is all but guaranteed we're getting that September rate cut. Then he said inflation is making progress, but the labor market is showing some concerning signs. That's good for rate cuts. The balance of risks has shifted towards the labor market and away from the inflation side. That's also good for rate cuts. If we were not seeing evidence of the labor market was weakening, I wouldn't be debating a rate cut. That's also good for rate cuts because obviously he's saying that the labor market is becoming weak. And he says, I'll probably be in the camp of taking a more measured approach because we don't know our destination. I'm still unclear of how tight policy is because the balance of risks has shifted towards the labor market. So what he kept repeating in this interview with the Wall Street Journal is that, hey, Someone said he's bald Amit. That is disrespectful. That is disrespectful. That he keeps saying, hey, the labor market's weak. And we talked about this yesterday on the Sunday show. The Bureau of Labor Statistics is going to come out on Wednesday, and they're going to give a revision to the jobs numbers that we have had over the past year. If that revision is to the downside and we lose another, let's say 500,000 to million jobs that we thought we had, the labor market really gets weak. And I think the market could react negatively, i.e. bad news being bad news that day. And that's the same day as Jackson Hole. So that might be a very intricate and complicated day in terms of how the market prices in the Fed speech. But also the market could think, well, if we lost 1 million jobs, we definitely need to cut rates immediately. And the market could be like, well, that's actually bullish. Bad news is good news. And so I think we're going to see how the market reacts to it. But at least we're getting indication from Kashkari that, yeah, it seems like it's time to officially cut rates. And then you had Goolsbee, who was another Fed president, who said, when you set a rate high like we have and hold it there while inflation falls, you're actually tightening. If you keep it too tight for too long, you'll have a problem on the employment side of the Fed's mandate. Remember, maximum employment is one of the Fed's dual mandates. So at that point, you've got Goolsbee saying, yeah, we probably need to look at this labor market thing. You got Kashkari thinking we got to look at this labor market thing. You got Powell, who's probably wanted to cut for the past 2 months, but hasn't been able to get the committee on board. I think it is very likely that we get the rate cut. And then the question is, how does the market react to the pricing in of that rate cut? And is it a sell the news event if we've already priced in momentum from the rate cut? Or do we go higher? Now, Ed Yardeni, we're going to listen to what he has to say. He kind of thinks you're going to get one rate cut and that's it because the economy is so strong. I think there's still a chance for two, but his perspective here, I think, is important. And so we'll listen to this and then keep going further in terms of how the market might end up pricing in this inevitable rate cut.
But his perspective here, I think, is markets ahead of the Fed's Economic Policy Symposium in Jackson Hole. Let's bring in none other than Ed Yardeni, president of Yardeni Research. Ed, to try to help us wade through the noise and everything and figure out what kind of speech should we be bracing for? And what do you make of the fact that actually the markets are still more dovish than the Fed itself is right now in terms of that September cut? They think still a chance of 50, whereas as we've been following, I'm not quite hearing that maybe from officials.
Yeah, the markets are very dovish. Expectations are 25 to 50 basis points of the September meeting. I think there's still expectations that maybe we'll even have 100 basis points between now and year end. I think it's going to be 25 basis points at the September meeting, and I think it's going to be one and done. Economy's just doing too well. I know that people got freaked out by the last employment report, but I think a lot of that was weather. And some of the other indicators that came out kind of confirmed that, like housing starts, single-family housing starts took a dive in the South. So if I'm correct about that, they're going to get some indicators before the September FOMC meeting that suggests the economy's alive and well and the labor market's doing well and that inflation's continuing to moderate. So I think 25 basis points is enough. And I think that's what Powell will probably communicate. It'll be dovish, but not as dovish as the market is discounting.
I don't know if you have a kind of an overall thesis for what's been going on this cycle. Amrita Sen, who we just talked to a moment ago, in the past has said it's been an industrial recession, but not a consumer one, which Walmart really confirmed. So a lot of the typical signs that start in the industrial economy and tell us the slowdown are coming haven't worked because it's just been a slowdown in the industrial economy post-pandemic, which kind of makes sense. So what does that mean for stocks? I mean, the short answer is they keep going up, but is it more nuanced than that?
Well, I think it is more nuanced. I think the goods economy has been in a growth recession, but it's really interesting. We had this huge spike up in demand for goods by consumers coming out of the lockdowns. It lasted about a year. And then rather than taking a dive, the demand for goods just kind of went flat. And I think we're just kind of finally catching up with the upward trend we had before the pandemic. So that's not so terrible. But it looks.
And again, that's also why companies raise prices, because after the pandemic, when people were spending money on goods, companies realized they can jack up the prices, which contributed to the inflation problem. That is flatlined in terms of demand, but it's starting to get back to levels in 2019 before the pandemic, which should lead to a theoretical broadening out in the goods part of the market.
So it doesn't look very good when you look at some of the indicators for the goods economy. It looks like a goods growth recession, not a outright recession. And meanwhile, the service economy has been fine. There's technology now accounts for half of capital spending, and that's been doing quite well. So all in all, the economy, I think, is all right.
Do you just kind of stick with stocks broadly? Do you try to tilt more towards big
Yeah.
growth stocks and the kind of AI names that became a bit overextended. We were just talking a moment ago. I mean, you do wonder about an NVIDIA. At some point, the edge that they have gets competed away. AMD as well doing a deal this morning. I don't know if that tells us that, you know, where exactly should people kind of go if they want those big gains, you know?
Well, you know, if you're nervous about the Magnificent Seven, there's always the somewhat less magnificent, but potentially magnificent S&P 493. There's a lot of stocks in the S&P 500 that have done actually pretty well, just not as well as the Magnificent Seven. And I think there's still plenty of opportunity for the market to go higher as it broadens out. I'm not quite as excited about the small caps, mid caps, because I think the excitement there was justified if interest rates come down a lot, but I'm not in that camp.
And I think that's the sort of inevitable question here with small caps. It's like, what's going to happen with that? I mean, you got the Tom Lee prediction of $300 by, he said, the end of September. That's probably not going to happen, but maybe end of the year. And then you've also got individual small caps that can do well if rates come down, but the overall Russell 2000, not sure. Now, granted, if the S&P consolidates at this level and we don't see 6,000, 5,800, but we see a 56.5, 700 level or 5,700 level, maybe you do see small caps outperform. It feels like tech is going to lead the way again so far. If we look at the Max 7 right here, you've got NVIDIA up again, Tesla up 0.4%, Meta's down slightly, Google's up 1.6%. Google, the dip at 158, now is at 167. I know there's all this DOJ breaking up Google talk, but it seems like the market doesn't care too much. Amazon at 177, Apple down slightly, and then Microsoft at 419. Big tech has recovered pretty nicely. Not at their all-time highs yet, but not too far from it. And if tech ends up leading the way, then this is going to be an S&P QQQ rally towards the end of the year, not a broadening into small caps, but we might see a broadening into other sectors like regionals, even if it's not specifically just small caps. The question is going to be what catches a bid on that rate cut. And I think this is another reason why Palantir is up 2.3%. Palantir is in such a perfect position. It fits the AI thematic. It fits the rate cut narrative. It fits the not a super large cap narrative. So it's definitely not a small cap, but it's kind of, this company that's reaccelerating growth, and it's under 100 billion, which I believe, yes, is very expensive given the growth that Palantir is paying at 71 billion. But that doesn't mean the market doesn't feel the growth can justify the valuation over time. And if they keep reaccelerating, which means Q3 just shows another 30% year over year quarter, which I think they're going to get to because they know how close they are to 30%. Last quarter was 27%. I mean, you just can't. It's hard to look back against it, especially if the fundamental thesis is they're the only company making AI valuable. So my point of bringing that up is that if Palantir goes up, to like $35, $36 by the end of the year, that money is not going into IWM if it's going into Palantir. And so where is the money going to come to help small caps and help other parts of the market if it keeps pummeling into Palantir, NVIDIA, Microsoft, et cetera? I think that's what we're going to have to find out. Or if you're a company like SoFi that's very rate sensitive, maybe the money starts going there. SoFi up 1.5% in the pre-market, 7-11 right now. They've been waiting for rates to come down for a very long time. Maybe that finally catches a bid. So again, I think it's going to be very individualistic and selective with small caps, but not necessarily a broad-based rally in the IWM in general. But if S&P consolidates, maybe that ends up happening. Rocket Lab right here, 696 in the pre-market's up another 6%. So Rocket Lab is up 18% in the past 2 days. I think it's up 30% over the past weeks because it was up 9% the day before being up 12%. Rocket Lab doing great. ASTS, this company went up like 150% last week. They're up another 1% right now. That's helping Rocket Lab catch a bid. But you're seeing Rocket Lab, which to me, it's not technically a small cap, but at $3 billion, to me, it's basically a small cap. And it has some momentum, has some growth, is a bit more exciting. If you're selective with some of your quote unquote small caps, maybe companies like Rocket Lab end up outperforming over the latter part of the year. A rate cut will definitely help Rocket Lab that also has debt because it means the cost of capital is going to start to come down. Palantir 32.90 in the pre-markets. Where are we at? We are at, 32.87. I mean, look, the momentum's there, dude. I think 33 is not crazy. I know it's being greedy, but the momentum's there. And if the momentum's there, maybe we're going to see some excitement getting into that $33 range. Okay, so that's what we have in the context of Palantir. So a little bit more on some macro things. So again, we talked about rate cuts. Neil Kashkari is really excited, or it seems like he's excited to cut rates. Actually, let's go to AMD, then we'll go back to macro. So AMD buys a company today for $4.9 billion. It's called ZT Systems. It's a leading provider of AI and general purpose compute infrastructure for the world's largest hyperscale providers, bringing extensive AI systems expertise that complements AMD silicon and software capabilities. It really does feel like AMD bought their version of SMCI. And that's what we're seeing right now. So 4.9 billion. It's going to have a payment of up to 400 million based on certain post-closing milestones. 4.9 billion is a decent chunk of change. So it does feel like AMD vertically integrating this feels that this can accelerate their growth, which is important because AMD has good growth, but it doesn't have NVIDIA type of growth. Lisa Su said, our acquisition of ZT Systems is the next major step in our long-term AI strategy to deliver leadership training and inferencing solutions that can be rapidly deployed at scale across cloud and enterprise customers. She adds that ZT adds world-class systems design and rack scale solutions, again, SMCI type of stuff, expertise that will significantly strengthen our data center AI systems and customer enablement capabilities. This acquisition also builds on the investment systems we have made to accelerate our AI hardware and software roadmaps. It doesn't seem like if these companies don't believe that AI is real, they would be chalking up $5 billion to provide IT infrastructure solution companies like ZT Systems. Or SMCI would be raising guidance by $3 billion from 23 billion to about 26 billion. Like, it just doesn't seem if AI was fake or if there wasn't a massive backlog of demand that we would see this stuff happen. But it's happening. So it makes sense, and it goes to further prove that the AI revolution, it does seem, at least from the NVIDIAs and AMDs of the world, they're investing a lot more money into it. AMD is up 0.47%. I would expect AMD to be red this morning. Usually when you dish out $5 billion, the market's not happy about that, no matter how you justify that acquisition. So it's interesting that AMD is up. It was at 154 in the pre-markets. Now it's at 149. We'll see what happens when the market opens. But maybe, the market's thinking, all right, so now AMD is not going to have to spend more money externally on keeping their chips secure and being able to provide the server infrastructure for it. And maybe they actually are able to grow because the ZT Systems is going to help them become not only more efficient, but help them get out supply quicker to match the demand, which should increase top line revenue growth. So we'll see how the market reacts to that when it opens. Bitcoin right here is basically flat on the day. Bitcoin at 58,601. One news on Bitcoin, or one piece of news on Bitcoin, is an old Italian bank called Banca Sella now offers Bitcoin services directly on its banking platform. So we're seeing more banks get excited about Bitcoin. Additionally, Goldman Sachs has about $500 million of Bitcoin spot ETFs. We saw that last week. And overall Bitcoin ETFs, they did have a net addition last week. It just wasn't as much as they had a couple weeks ago when they added 1.4 billion in like 2 days. So the Bitcoin story has been relatively flat. I think we need a rate cut, and I also think we need geopolitical instability to definitely be at a minimum. Seems like the Iran-Israel situation is calming down, which is going to be good. But right now, not really sure what is the catalyst that gets Bitcoin to go higher. If you look at it from a technical perspective, the chart matches 2016 and 2020 when it has its crazy run. And it seems like it's gearing up for that, but you might need to unlock a lot of liquidity in order to make that happen. One thing about Bitcoin, when it ran in 2016 and 2020, there were almost effectively 0% interest rates, right? I think it was like 1 or 2% in 2016, and 2020 was basically at 0. So we're living in a different time with 5.5% interest rates, which does take away capital from the crypto markets. But if we lower the rates, theoretically, that hopefully should help in the context of getting more money to go to Bitcoin. VIX is up today. Let's take a look at the VIX. VIX right now, it's up about 4% today. So that's signaling. Usually this implies an S&P move to the downside or the upside of about 1/3 of what the VIX is up. So if it's up 4%, you might see the S&P down theoretically 0.5%. But again, that's in the pre-market. So we'll see how that changes as we get into the market open. And then I wouldn't be surprised to see the S&P and the NASDAQ have a little bit of a tough week. And the reason for that is because they have their best 7 days that they had all year last week. S&P is at 555. It's up a little bit in the pre-markets. It is just 10 points away from 565. If we look at the chart on the S&P, it's just hilarious, dude. Like, it's literally hilarious. I mean, look at this right here. So you're at the top at 555 right here. Then you go all the way down to 507. This was the sort of generational buying opportunity for those that got in at certain levels. We'll see if we hit it again, as some people think we will. But if not, then we keep going. Then we bounced up to 530. Then we went all the way back down. This is when the bear said, haha, I told you the Japanese carry-yen trade is not over. And then I think right around here is when Japan said, we're not going to raise rates. And then from there, we've been going up and up and up. Now, the Japanese yen is strengthening a little bit against the US dollar this morning. It was up just slightly. which is not good, but it's not horrible. So, I mean, it's okay if it goes up more and more. You might see a little bit more volatility. That also could be the reason why the VIX is up right now. But as soon as the Bank of Japan said that, it was just kind of further up. And that doesn't mean we'll get more volatility to the downside, but that does mean that at least so far, markets seem to like where things are going. And again, the earnings projection for 2025 is $264 a share on the S&P 500. When you get a $265 share projection, you put a 22x multiple on that, you're going to get closer to 5,800 on the broader market. And that's important to take a look at, because if that's the case, then markets probably tend to go a little higher. Let's hear from Dan Ives and on where he thinks the tech rally is going, and also his thoughts on Palo Alto Networks, because they are going to have earnings today after the bell.
The rally we have seen in tech. It was the strongest sector today, and it's really been leading this turnaround, this rebound, after we did see a pullback in the S&P and a correction in the NASDAQ.
It's a golden age for tech. I mean, in my opinion, we are just in the early stages of a bull market. And if you look at what we've seen from AI revolution, just from broader tech, it's been strong from an earnings perspective. And the growth scare that we saw, it's just a bump in the road to what I believe is really this fourth industrial revolution playing out. And that's how we've handheld investors through this. This is the time to own tech. And I believe it's really just the start, still 9 p.m. in an AI party that we believe goes to 4 a.m.
We're in an election cycle. We're already starting to see some of the signs of cybersecurity issues and hacks as we do move closer to that November election day. On the flip side of that, we saw the debacle with CrowdStrike a couple of weeks ago as well. So how does that position us for cybersecurity earnings when we do have Palo Alto kicking them off on Monday?
Yeah, I actually think as a subsector, it's one of the strongest ones to own, and not just into year-end, but into early 2025. In terms of what we're seeing in more and more movements to the cloud, cyber is actually benefiting. Names like CyberArk, Checkpoint. I think Palo Alto, it's actually one of our top names the last few years. It's a table pounder in our opinion. This is a name where I think glass half empty still on the street, but now they're going for platformization. And I think when the Kesh and team are doing, they're going to gain more and more share. And even when you look at the CrowdStrike situation, a black eye for CrowdStrike, Palo Alto could benefit from that.
Do you expect to see that show up in the results we get next week?
Not in terms of what we see in terms of results, but I believe as we go into fiscal 25, this is just going to be another tailwind for them. You look at that free cash flow story. This is just what I believe is sort of the second inning of this game playing out for Palo Alto. They are going to be a share gainer. But you take a step back, when you look at Zscaler, Checkpoint, CyberArk, Palo Alto, this is really actually just the beginning of really the second, third stages, what I view as sort of this AI revolution. Cybersecurity is going to be a big beneficiary there. So I think as a subsector, could be the best outperformer going into year end.
Palo Alto will be interesting, dude. Palo Alto stock has been tumultuous. That was a good one, right? That was a good word. This year, especially when it fell like 30% in January, and then Pelosi loaded up. By the way, we got to give some credit to Pelosi, dude. She bought 20,000 shares of NVIDIA basically at $120 when you average out her cost basis over the past, it was June 24th and then July 26th. So she bought the top of NVIDIA, the short-term top, went all the way down to 90. She didn't get that 90 dip, but we're right back at 120. So, I mean, like, she bought the dip and she's still prime on her average as she bought the dip, and I think she thinks it's going higher. So Palo Alto right there, you can see February 20th fell from 360 to 261. This is when Pelosi bought call options. Up 15% year to date, but it did have a big downturn. And this drop was really weird. This drop was basically them saying that they don't have enough demand, even though like they kind of did have demand, but the way they communicated kind of felt like they just didn't have enough people willing to continue paying, and they were growing like 15%. But ever since the CrowdStrike thing happened, I think the entire market sentiment has shifted to more demand, and they probably got a ton of demand after CrowdStrike, because I'm sure some people left CrowdStrike and they said, hey, Palo Alto, can you hook us up? So I think they're going to have a strong earnings, and I think they're going to reiterate how important cybersecurity is in the broader AI revolution. Again, if AI becomes a thing, you're going to need cybersecurity to protect a lot of AI, just like energy is going to be needed to protect a lot. I mean, the amount of data that's being stored in these models, and then in a company-specific implementation of that model, you have to have some type of endpoint security solution there in order to keep things secure. So I think Palo Alto is going to have a decent earnings and they're going to show good growth. And if they don't show good growth, then it's a question of like, hey, is CrowdStrike just that good that you guys couldn't grow even after CrowdStrike has one of the worst debacles in history? Because you would imagine some people leave CrowdStrike and they go to Palo Alto. And if you didn't swoop in, if you're the Palo Alto CEO and you didn't like get all 5,000 of your salespeople to immediately start hitting the phone bell, hitting the phone to start making calls, and like hitting up these CrowdStrike customers and just being like, hey, we'll give you a 30% discount, just like come to us instead, then I think it's a massive missed opportunity. And I think they probably capitalized on that, at least to an extent, which should increase their guidance. NVIDIA right here up slightly in the pre-markets, 124. Fubo is up 15% because they beat Disney in a lawsuit where the judge ruled it is illegal from an antitrust perspective for Disney to work with other streaming providers to stream live sports, which is what Fubo specializes in. That's why it's up 15%. We'll see how that plays out as the market opens, but at least the market is excited about that right now. Apple at 226, Tesla at 216, Palantir 32.75, Robinhood as well. Closed at $20 on Friday. Right now in the pre-markets as well, it's at $20. So we'll see what happens with Hood, but that one is up, and then the Nasdaq right here at 475 on the day as well. I probably said phone bell because I know we're about to ring a bell, and so I've already started referencing my bell. Amit, what's your opinion on Starbucks pump? It's bound to get a correction, right? I mean, yeah. Look, I don't think it's worth $20 billion extra just because they hired a new CEO. However, it's not about what I think. It's about how the market perceives the new CEO. And the new CEO is a rock star, dude. I was listening to the Olin podcast over the weekend, and apparently, I didn't even know this. The dude transformed Taco Bell before he went to Chipotle. So he made Taco Bell like one of the best fast food restaurants. And then he went to Chipotle and kind of took those same philosophies and then turned Chipotle into a really good restaurant, navigated diseases that were going on in Chipotle. And Starbucks gave him $100 million to say, can you do the same for Starbucks? I don't know what he's going to change. I think it has to do something with either a food offering or a massive reduction of costs, which leads to not having to cut the price of coffee, but still being able to maintain the margins. The easiest thing is to just cut the price of coffee, but I don't think, they want to do that. So I don't know what he does, but whatever he does do, the market is excited about that to the tune of $20 billion. And they believe Starbucks will continue to rally based on that. So we'll see how that plays out. Trump and Kamala. So Trump and Kamala. Trump is now back up in the polls with Kamala Harris. He was down in the polls for the past 2 weeks, if you believe Polymarket, which is a major online betting site. It's really the only place people are going to bet. There's a lot of these different competitors, but Polymarket, sometimes something can basically make or break your startup. I don't know what Polymarket's worth, but I know there's a couple of other companies like Kalshi, if you guys have heard of that are competing in the same space. And Polymarket has used this election cycle to basically prove their value proposition to the broader market. And now anyone who's curious about election odds, they go to Polymarket. So I think this startup, I don't know the valuation, but I would imagine that they get a valuation bump this year because they have so much traffic of people taking a look at it. Yeah, they raised $70 million in 2024. I don't know what the valuation was, but they raised $70 million just a couple months ago in May of 2024. It's $1 billion. It's $1 billion. Their valuation is $1 billion. So this website that I'm looking at says they're worth $1 billion. I think they're going to be worth more after this election cycle. But they're showing that Trump's up 1% in the polls. Why? Because Kamala Harris released 2 policies over the weekend. One was about price controls on food and groceries. And another one was giving $25,000 to first-time home buyers to stimulate the housing market that has been destimulated because of the rising rate cycle. As a result, you've got a lot of people who are moderate that just felt these policies are way too government heavy. And people that were hesitant on Trump for a variety of reasons started via Polymarket to bet on Trump instead because they feel like these policies are too communist, which is now the running theme. Trump tweeted out a picture of Kamala with a communist flag. And they feel like it's just too much given the nature of inflation that we have right now. If you were to give $25,000 to every prospective home buyer, someone has to pay for that. And you can argue that maybe you do a corporate tax. You can argue that you re-stimulate the housing market, which creates more demand, which ends up offsetting the price of it. But at the end of the day, I think a lot of people are worried that inflation could reaccelerate. And Trump will have inflationary policies as well. But this one is just so direct and explicit, like printing $25,000 for new home buyers, that's potentially ruining some of her odds. So the lack of like substantial and direct economic policies, at least from Polymarket's perspective, because that was the only reason why Trump gained a lead this weekend. There was no other news besides Harris's economic agenda officially being released. That might be the reason why Trump got an edge in the polls. I still don't know if the market definitely wants Trump to win. I think theoretically the market would be happier with a Trump victory, just given the variety of things he would do with corporate income taxes. But, maybe they are scared of other things. In general, I think the market wants Trump to win. And so that might be also helping the stock market if the market prices in a Trump victory. So we'll see. We'll see how that plays out. But that is at least what happened over the weekend in the context of the election. All right. We've got 5 minutes until this market opens. Starbucks right here at 94, S&P at 555, Robinhood at $20, Palantir 32.64. What do you guys think? Let's put it in the chat. Let's do a poll. Do we think do we think Palantir? Do we think Palantir actually gets to $33? And while we're voting on that, let's hear former SEC commissioner talking about Kamala's policies and see what his take is on that as well. Palantir 34 by the end of the day, dude. If that happens, that would be pretty damn epic if that plays out. All right, so let's take to this.
Democratic convention and Vice President Harris's economic ideas. Former SEC Chairman Jay Clayton, he is now independent chair at Apollo and a CNBC contributor. How you doing?
Doing well. Good morning.
Good to have you. Good morning. We are in, I still think, the honeymoon period, which is probably likely to ramp up as it does usually when either party has a convention. Have you been surprised at the level of enthusiasm among Democrats that Vice President Harris has been able to?
I'm not surprised that there's an uptick, but I am surprised at the level of enthusiasm, including around the
Biden anymore. So people have already forgotten that they hated the economy.
And that's genius marketing, right? It's a change. It's a change in the leader. Forget the economic problems.
She says on day one she's going to do all this. Day one was January 21st. 2021.
But can we back up and say, where do we really stand, and what should we be looking for in terms of economic policy?
I don't know. Will you do that today finally?
Yeah.
Okay. Good. I've been waiting for it.
You're waiting for that. Okay. Look, there's really good news for America, which is America is in the best place in the world. It's the best economy. We're coming out of the pandemic better than anybody else. There's really bad news. We have had a bout of extreme inflation. Grocery prices, if you had a $100 grocery basket, it's 125 or more. Wages have not kept up. And we've increased our national debt by 25%. It's 125% of GDP. Those are both really bad things. If I'm evaluating who's going to have the better economic plan, it's who's going to take the strengths and address those weaknesses. And what I'm hearing is blaming grocery store owners and others for the economic problems. That's not how you get out of this.
Does Trump and his advisors, do they know how to take the right message, or is it going to be tariffs? Is it going to be? I mean, how are they going?
Here's what
either side seems to.
Here's what I think the right message is, and why I expect that the Trump message is going to be more appealing when you look at it closely, which is, where does growth come from? Growth can come from a couple of things. Energy. If we have lower energy costs, that's going to reduce the impact on consumers. It's also going to foster growth. If we continue to be tech leaders, when we're tech leaders, we get the benefit of growth around the globe. We only have 360 million people. There's 8 billion people in the world. When they get hooked in to a digital economy, we all benefit greatly. Capital allocation. We're better at allocating capital than anybody else in the world. 4% of the world population, we allocate over 50% of the world's capital. Focus on those things and competence in government. That's how you get real growth. That's how you get real wage growth for the people in the middle 80% of the economy.
Yeah.
All right, we're going to see how that plays out. Again, markets got their first taste of what a Harris economic agenda would look like. And so today will be the first day that the broader equities market starts to price in if they believe that economic agenda can win or if they believe it's going to lose. All eyes on Palantir. We got 5 seconds until the market opens. Let's see if we can take a run at that illustrious 33. Ladies and gentlemen, the stock market is now open. Wake your ass up. Here we go. All right. So we get a sell-off as soon as we get into the open at $32.08. Now, this typically happens pretty much every time Palantir makes a run. As soon as we get into the open, you get a ton of people taking their profits right there. You guys can see 3 consecutive red candles from 32.93 all the way down, bottomed at about 32.05. Then we just bounced right up to 32.15. Now we're right at 32.12. It's probably going to play around a little bit right there until we see some definitive price action. Let's look at the order book flow really quick and see where the current resistance is. Robinhood opens up, by the way, at $20.05 on the day. Current resistance for Palantir is really not there. At 33, there's like 5,000 shares. I don't see any massive resistance. At 34, there's also barely any resistance. So maybe the walls have not popped up yet, and they'll pop up in a little bit. But as of now, there's not a ton of resistance. The bid and the ask is actually very narrow at this 32 level. And so volume is going to determine what happens from there. 4 million shares have been traded in 1 minute. I mean, the amount of volume on this stock, absolute insanity, dude. 4 million shares in 1 minute is just crazy. SoFi's at 1.36 million. SoFi up 1.5%. IWM up about 0.25%. The NASDAQ basically flat on the day. NVIDIA's volume is 16 million. So although we think 4 million is a lot for Palantir, 16 million on NVIDIA. NVIDIA down just a little bit right now, 0.4%. Netflix at 675. Fubo at 1.9 on the day. Fubo's up 25% after that lawsuit. Robinhood, $20.08. So Robinhood's opens above $20. Again, it closed at 20 on Friday after hours, now opening at $20.07. Palantir right back to 32.30. Again, we've seen this story many times. It declines within the first couple minutes, and then once that decline settles in, you get buyers who step in, and they end up going for it and seeing if they can make a run. So we'll see if this one can hit 33. Google's at 167. Enovix at 996. Enovix has had a nasty fall, dude, over the past month. Enovix was at $18. Now it's at 997. So about a 50% decline. Enovix, again, very speculative company. They have some major deals, but it's still very speculative. So this one has fallen about 50% as the broader stock market took a little bit of a drawdown. Alibaba, 84.20. August was the first month that Alibaba had net outflows from foreign investors. So although Alibaba is up, there have been some issues getting foreign investment to be attracted back into China. CrowdStrike, 264. Airbnb, 117. Home Depot at 363. United Healthcare, 578. Palo Alto reports after the bell today. Robinhood at $20.08. Palantir, 32.34. Right back at the level it was at on Friday at this $32.33 at this $32 level, mid $32 level. So we'll see how that holds. Netflix at 676. Dell is at 110. Bank of America still with a $1 under $60 price target on Dell. So they're still bullish on Dell and their operating margins. Shopify is up 74.83. Disney is 89.87. They're up a little bit. And then PayPal is 68.39. So PayPal $2 away from 70, and then Shopify about $5 away from $80. Clover is up 18%. Yeah, so this is the Chamath SPAC. I'm pretty sure a lot of people remember this. This was up 20% on Friday. Now it's up 20% again. I'm not touching this, but for those that want to mess around with this, have fun. I have no idea why this is running. Maybe there's some like fundamental news, but it also might just be a little bit memeish and speculative. But this one is up 20% right now as we get into the market open. Where's ASPN? That one was up a lot last week. ASPN, that one's up another 1.2%. So that one's showing some strength. ASTS up about 2.5%. They Rocket Lab almost up another 1%, 663. Now Rocket Lab was up 6% in the pre-market, so it definitely fell from the pre-markets, but that one is still up right now. Alexander the Great, can you stare at Palantir's price so it goes up? This is what we do pretty much I was on Reddit. Someone said something so funny on the Palantir subreddit. They were like, guys, I think we found a stock that only goes up. That's the most epic quote I've ever, guys, I think we found a stock that's definitely a quote someone should say at the top, theoretically, but still, it's kind of true, dude. Palantir has only gone up this whole year. What if we find a stock? What if we found a stock that literally only goes up? Which I think my definition of that would mean obviously stocks fall, but when it falls, the dip buyers just step in and they protect it from falling even further, which is crazy because Palantir has 2.2 billion shares outstanding, dude. This is not a company with a couple 100 million shares. There's a lot of shares to go around for Palantir, and they're going to dilute at least 2% every year. So they're going to add more and more shares. That's just how management has stated their plan over the next 10 years. And so, people are willing to buy, people are willing to step in, and that's because you got a CEO and a narrative around a company That's very, very exciting. Palantir, okay, now it's falling below 32, so getting a little bit of a decline right there. Got Palantir at 31.97. Is the whole market taking a little bit of a dip? S&P 500, 555. S&P is up. QQQ is up at 474. Yeah, as soon as I say Palantir is a stock that only goes up, we get Palantir that goes down. But see, it recovers right now. It's at 32.05. Like, I think there's so many dip buyers that are ready to buy this thing as it goes down and it touches 31, and then boom, comes right back to 32. Like, people want exposure, man. People want exposure. Could you imagine we had the opportunity to buy this shit at $6? Like, it still blows my mind that I would be at my chiropractor in 2022 waiting to get checked out, and I just like swipe up and I buy 100 shares for $8. And it's like, it's just crazy to imagine. Like, if I knew at the time, like, maybe I should. But now, granted, all my money went into Palantir. I didn't have a lot of money. Like, every paycheck I got, it went into Palantir after paying off my expenses. So it's not like I had like hundreds of thousands of dollars to load the dip at $8, like some of you did who have done very well. Clover, right, you're up 21%. But whatever I had, I put it into Palantir. People forget that Palantir was bouncing between 20 and 25 for 6 months. Yeah, and it was bouncing between 16 and 20 for about 8 months before 20 to 25. And then we had the quarter that broke us out, which was Q4 2023. So it takes a real quarter to change pretty much everything. Chad says, admit your analysis of a stock. It goes up and down. What if it only ever went up? Yes, exactly. That is my that is my analysis of the broader stock market. Sometimes it goes up, sometimes it goes down. And when it goes up, it's great. When it goes down, buy the dip. That's how it plays out. Nate says, so it will probably bounce between 28 and 34. Well, here's the thing, dude. It's in an uptrend right now. And so if I had to guess, I would say Palantir bounces between 25 and 35. Palantir right back at 32, now green on the day, for like the next 10 months. But you've got rate cuts coming, you've got a dovish Fed, and you've got reaccelerating growth. And you've got the market, again, I keep reiterating this point, the compounding media attention is going to get more buy. The amount of questions I get on a daily basis of, hey, like, what does Palantir do? Not only in my DMs, but just on like Twitter, like after I tweet about Palantir, there's like 10, 15 comments of like, what does Palantir do? What does Palantir do? Like, people are curious. And a lot of people are coming in just because of FOMO and they just like want to catch an uptrend. But I think some of those people are going to be so excited about the story that they're going to stay, even though they only cared about the stock. And it's our job as a community to get more and more people to be interested about the company and welcome them in. So, you know, when people ask, I try to point them to good resources, but then it's up to people to do the research, which is obviously very hard to do because you have to dedicate a lot of time, because Palantir is not an easy company to understand. It's just not. It's not an easy company. Unless you think, okay, AI is going to be the future, Palantir is AI, and you buy it and that's your thesis. But outside of that, there's a lot of stuff to understand around the company itself. But I do think more people are going to get excited, and that's going to be good for Palantir. Robin it at $20. It was at 2018, came back down to 20, still green on the day. AMD at 148, ASTS up 4%. NVIDIA is red, down 1%. We have earnings. 64% of NVIDIA is held long by institutional investors. I found that out over the weekend. SoFi 714. SoFi showing some momentum. So the institutions definitely want NVIDIA to go up, and that's an important thing for NVIDIA's earnings as well. General Weenus says Euphoria is at an all-time high. I don't know if it's at an all-time high. I think it's definitely high. I don't know if it's all-time high. I think all-time high is when you see Bitcoin move. Like, I think Bitcoin really shows euphoria within retail, because it's the most speculative thing that retail just wants to jump into to like catch a bid on and make some dollars, whatever they can make off of Bitcoin, if it goes up from 58 to 65 or whatever it is. And we are not seeing that level of enthusiasm yet in the crypto markets. And I think that bleeds into stocks. So until we see Bitcoin catch a bid, I don't know if we're at peak euphoria. And I think maybe peak euphoria comes after 2 rate cuts and a Trump presidency. Maybe that's what creates it, which is why 2025, we were talking about this yesterday on the Sunday show, 2025 is going to be a little scary. Robin it back at $20.09. We don't know what's going to happen in 2025. Like, can these companies keep accelerating growth off of tough comps from 2024? You know, Palantir can show 30% growth when they're comparing it to 13% growth from last year. Can they show 30% growth when comparing it to 30% growth from 2024 in 2025? Theoretically, the market's pricing that in right now. And if that doesn't happen, the market's going to take away the multiple pretty quickly. CrowdStrike is one of the only companies in software that has been able to show consistent 3-year CAGRs of 30% top line growth with 40% free cash flow margin growth. Again, over the past 3 to 4 years. It's the cheapest it's been since IPO, because it's been so expensive since 2019 because of top line growth being astronomical. I think guidance is going to take a hit, so that multiple might continue to take a hit going into the end of August when they report earnings. But if Palantir's top line growth doesn't take a hit, then this thing's going to the moon because there's not many companies that can grow top line at 30% continuously over 4 or 5 year period. And if that happens, I think 32 bucks is going to seem pretty cheap over the next couple of years, but it is all contingent upon that growth. Once Bitcoin passes 100K, then we'll start to see euphoria. Yeah, even if Bitcoin gets to like 85, 90, I think we'll see more euphoria, but I don't think it's fully there yet. HIMS, where's HIMS? This one is taking a beating after earnings. HIMS is at 16 bucks, so that's up 3% on the day. Not bad for HIMS. NVIDIA now going green at 124. Palantir still red, but touching 32. S&P at 555. Intel at 21. That's up a little bit. Carnival Cruise up 1%. The cruise line is doing okay. Walmart, great earnings last week, 73 bucks. Estee Lauder had earnings today. They are down 1.5%. They were down 9% in the pre-markets, but they're down 1% right now. Let me pull up their earnings and see what they said as well. I didn't get to read too much on the earnings, but I think their read on the consumer is what I care about the most. So let's see. Goldman Sachs, by the way, downgraded Snowflake to 170 from 220. So they lowered Snowflake earnings. Okay, Estee Lauder, we had adjusted EPS of 64 cents, adjusted net sales. Oh, the CEO is retiring? Interesting. Okay, I didn't know that. Adjusted net sales of 3.87 billion, so they beat on the top and the bottom. They lowered their 2025 guidance, which is fair. CEO is going to be transitioning. Net income's down 61% year over year. Okay, so that's probably why it was down 9% in the pre-markets. Wow, look at this. Skincare is down 4%. Makeup's down 1%. Fragrance is up 1%. Hair care is down 4%. America's up 1%. Middle East down 1%. Asia Pacific down 6%. CEO said, we achieved our organic sales outlook and exceeded expectations for profitability. Closing a difficult year, we anticipate continued declines in prestige beauty segment in China, but we plan to drive share gains in a market that focuses on long-term promise. Our strategy for fiscal 2025 includes a focus on innovation. Okay, so basically he's saying we had a crappy quarter, but over the long term, we should be okay. If the lipstick index is true, then if we do head into a recession, maybe them, Ulta, Elf, they don't suffer too much. Ulta Beauty right now is up 3.5%. Ulta went from 320 to almost 400 after Buffett disclosed that he's a buyer. And then Elf is up 5.77%. This was almost $148 last week. Now it's at 168. Top was 220 this week. Palantir back in the green, 32.19 on the day. S&P at 555. Robinhood, $20.17. We talked about Robinhood yesterday on Twitter. I did some math. Robinhood has a 46% take rate on every option that they trade on their platform. And they've already done 41% of Q2's volume and option contracts in 1 month in Q3, which means if August and September are going to be good months for Robinhood on the option side of the business, that itself is going to have a massive outperformance on their top line revenue, which is going to be good for Q3 earnings as well. Palantir here at 32.22 on the day. The take rate is 47%. So for every contract Robinhood trades, they make 47 cents of revenue. So they had 390 million contracts traded last week, or not last week. That would be crazy if it was last week. Last quarter, and they made 182 million bucks. This quarter, they've already done 160 million. So you would imagine if they get close to 390 million or break that this quarter, you're going to see a lot more momentum in the context of Robinhood. Can you explain take rate? Yeah, what take rate means is just how much revenue. So like on Bitcoin and crypto, Palantir at 32.16, they have a 40 basis point take rate. So for every dollar you buy of Bitcoin, they get 40 cents. So that's their take rate, right? That's not profit, that's revenue. And then net income is after you adjust all their expenses, which haven't been going up either, which is why the street is really excited about their growth, because if they're controlling their costs and revenue explodes organically, well, you've got a business that's doing really well. Now on options, they take more than what they take on crypto. They take 47 cents per contract that is traded. So when you trade a contract, they make 47 cents of revenue, not profit, but of revenue. So the more contracts that are traded, the more revenue they make, because their take rate is so high. Now on equities, their take rate is I think it's 5 cents, dude. It's really bad. It's low, because the payment for order flow, which is how they get their take rate, is abysmal, right? Citadel is not going to pay Robinhood a ton of money because of equities options payment for order flow, but they pay a lot of money on options because there's just more unit economics that are stronger there for the market makers as well. So that's why Robinhood is focused on this advanced trading platform that's coming out in October, because they know that if they can get more people that trade options religiously onto their app, they're going to make a shitload of money because the trading volumes are going to go up dramatically. And I think the street's going to pricing in that growth as well, that if that options trading platform comes to Robinhood, then that's going to be very important. Palantir at 32.20. And so that's why I think we're seeing perceived growth from the street in the context of these price targets for Robinhood. Sanjay, thank you for the 10 gifted, bro. Really appreciate that. Thank you to Sanjay. Sanjay's been a long-time supporter of the channel. So for any people that want to claim a membership, I think you just click on this green thing on the screen, and you can, the first 10 people to do that, get a free $5 subscription per month to the channel. You don't get anything exclusive from the channel if you're a channel member. Really, it's just to support the channel. So never had a paid subscription, never will do a paid subscription. I'm not going to do a paid subscription on Twitter. Some people have been asking about that. I just think it's cringe, dude, when you hide a tweet behind a paywall. And like the way Twitter does it, if you're scrolling on Twitter, like they'll show you like half of the tweet, and then it'll be like press to unlock to subscribe. It's like an article on a paywalled website. Everyone's so annoyed, right, when they get to an article and then they have to like pay $50 to read it. I just hate that shit. So yeah, we're never gonna have any paywalled or gated content. But I appreciate anyone who subscribed. So really, really appreciate it. Thank you, Sanjay, for that as well. Nubank, where's Nubank? Nubank is at 14.12. Wow, Nubank above 14. It was at $12 last week. They had an incredible earnings as well. So Nubank gaining some momentum. Palantir 32.26. Let me look at the resistance now on Palantir and see what we have here. Palantir 32.27. So we dipped all the way to 31.98, right back to 32.20. Volume is great at 9 million shares. At 33, the wall is 8,000 shares. So there's not a wall at 33. We just need more buyers. And I think we break through 33. And then at 34, there's not a wall either. That wall will probably pop up once we cross 33. But so far, the bid and the ask looks very clean, and the order book looks very clean if we get momentum to keep things going. Does the membership mean I'm part of the Amit family? No, everyone's part of the Amit family. That sounds so cringe calling it the Amit family, but everyone's part of the family on the channel, regardless of if you're a member or not. Can you explain volume? Volume is just how many numbers of shares were traded. So 10 million on volume means that 10 million shares have been sent back and forth between buyers and sellers, market makers, etc. And there have been more buyers to the tune of 27 cents, which is why Palantir is up 27 cents, than sellers. And so you get a stock that's up right now as the market opens. Same thing on the QQQ that's up right now. Same thing on the SPY. The reason the SPY doesn't move 3, 4, 5% a day like Palantir can, or any individual stock, is because the S&P has a very tight bid-ask spread. And for every buyer, there's usually a seller. You need a decent amount of buying volume to overcome the sell side pressure, which is what we've had this year, which is why the S&P is up 15%. But if an index moves 1 or 2 or 3%, you've got so much buying pressure to overcome the selling pressure that's a really big move. And that's why the S&P, CAGR is about 7% a year, because in general, you don't get dramatic moves like you get on an individual stock. Palantir is up more than 90% year to date. The S&P is up 16%. Again, NVIDIA is up almost 150%. The S&P is up 15%. It has been a stock picker's market. NVIDIA right here at 125. If you pick the right stock, you've had a hell of a year. And that's why, most people like to buy individual stocks versus the broader index. Fubo's up 30%. Well, speaking of individual stocks, there you go, right? This is what you get. Fubo up 30%. I don't know how, strong Fubo is as a standalone business, but it has been oversold. I mean, it's down like almost 90% all time, right? Yeah, I mean, this thing has been through a lot over the past 10 years that's been public. So now that it's getting some momentum, you're going to see some excitement. But overall, I'm not sure how good Fubo is as a long-term investment. It's just as a media company, not that exciting to me. But if you've been in Fubo, you're up 30%. I mean, it's not bad. And it's not a bad time either to think, hey, maybe I should take at least my initial out, take some profits here, and let the rest of it ride. Palantir now at 32.33, up about 1% on the day. And we're seeing some more momentum there. What else do we have? What else do we see? Do you think stocks are moving too fast, too much exuberance, in my opinion, 2021 vibes? This is a very good question. We've talked about this a lot every single day. I do think stocks are moving pretty fast. However, I think the catalysts are there to justify it. Again, for anyone who says this feels like 2021, it literally cannot be the same dynamic as 2021 because there's just not that much liquidity in the capital markets, because you've got $6 trillion in money market funds. And you've got a lot of people collecting money in high yield savings account because they're getting 5.5% or 4.5%, 5.2%. So because of the interest rates being where they are, Palantir at 32.40, it's hard to imagine that asset prices are artificially inflated versus the way they were in 2021. I think if you're a company that's putting up strong earnings growth, you are getting the benefit of the doubt from the market to continue that strong earnings growth. Now, if that earnings growth does not continue to happen over the next, not even year, over the next 3 months, you will be punished. But if you do that and rates come down, which helps you accelerate that, then you're going to be rewarded. And so I don't feel like it's a sort of artificial pump. It feels like a pump that's justified because the market is starting to price in a ton of growth for a lot of these companies. SoFi up 2.7% of the day, 719. SoFi getting some momentum as I think the rate cut comments have become accelerated this morning from Fed presidents, and rate cuts are very good for SoFi. Rocket Lab up 5.7% as well. Rocket Lab 8 cents away from touching $7, which is not bad at all. Big money will buy in fast. That's the other thing. If Palantir puts up really strong growth in the next quarter, I think big money is going to think, hey, we can't just ignore this anymore. And big money, the number one thing big money hates, like institutions, is missing out on a story. It's like VCs hate when they could have invested in Airbnb at a $5 million valuation, and then it becomes a $5 billion Series A round, and then they have to buy into the Series A because they think the thing is going to go to 50 billion. Hedge funds and broader institutional investors hate if they had a hunch about a stock and then it just runs up, and then they end up buying it when it runs. And this is, how it happens all the time with big money, because big money doesn't want to take a lot of risks when like retail, when Palantir's at $6. So I think that can compound Palantir as well, along with the ongoing media attention. But we're going to have to see how the market continuously feels if the multiple starts to compound and expand as well. Google. So price target upgrade on Google to $210 from Needham Capital. By the way, Jeffrey said DraftKings is a buy with a $54 price target. DraftKings currently at $34.18, so that's up a little bit today. Google, let me read a little bit off this note because we've all been thinking about Google. So the note on Google, let me pull it up real quick. So analyst comment says, we had dinner last night with the CEO of a Gen AI infrastructure company. In this note, we summarize our key takeaways from that conversation. They said, although most of his comments related to industry-wide Gen AI opportunities and challenges, his point of view was that Google and Amazon are the most likely winners of the current arms race to build out Gen AI tools, features, and capabilities. Key takeaways were CapEx will increase. 5 to 6 trillion will be the total CapEx required for new data center infrastructure to support generative AI. Google's going to be a big player there. Revenues of generative AI, he thinks, will be upwards of 100 billion in 18 months after spending 5 to 6 trillion of CapEx. Google would spend about 250 billion of CapEx to make $100 billion of generative AI revenue, which is kind of insane to spend 250 and to make that, well, just under 40% on that investment. But I guess if that's the case, then they think that's going to be strong. And then AI chips will consume about 5x more power than traditional public cloud chips. And he believes Google will be a player in the energy space needed to build out AI. So an interesting price target there at 210, believing that the generative AI revenues from all this CapEx spend will be monumental. Google is up about 1.5% on that report. I think the biggest risk to Google now is the breakup. I'm in the camp that the breakup doesn't happen, but if the breakup does happen and YouTube and Android are separate businesses, maybe that unlocks more shareholder value. Maybe it doesn't. If it does happen, everyone will get so if you own 1,000 shares of Google and they break out into 3 public companies, then you would get theoretically 300 shares of each company. I don't know how they would do that from a proportional perspective, but you would own a significant chunk of each of those companies based on your ownership in Alphabet. And then the question is, do your Android, YouTube, Google Cloud, and then Google Search shares go up as much as all of it under one parent company like Alphabet? I don't know. And I think the market's going to have to figure that out if the DOJ case becomes more pressing on Google as well. But Google is up right now about 1.6% on that upgrade. VIX is less than 3% up right now. Yeah, VIX is up. S&P is not down, though. So VIX is up on the day, but the volatility is not pointed to the downside. VIX right now up at $15.47. Where is Rocket Lab? Rocket Lab at 680, so it touched $7, then got rejected at $7. Now we're at 680. Nvidia 124. Fubo still up 27%. CrowdStrike 267. They're up 2%. And then Palantir here at 32.17. Robinhood just went under $20. Now it's at 19.89. S&P at 554. All right, so we're seeing a little bit of a red candle throughout every part of the market now. Starting to see small sell-off here, and that typically happens around 10 a.m. And so we'll see where that goes over the next hour. Danielle says if they break up Google, then Amazon is next. Yeah, I would agree. I think you can't just break up Google and get away with just Google. You can argue that Google's way bigger of a monopoly than Amazon because Amazon has competition in commerce, whereas Google has zero competition in search. However, I do think that, if you go after one of them, it's hard to not go after the others, especially because the broader market is just like, I think that's going to be Google's appeal. Google's appeal is going to be like, how the hell are you going after us? But you're not going after the other guys that obviously are engaging in monopolistic activities, even if they're not literally a monopoly. Microsoft and Azure Cloud would both get a premium if they split. Yeah, if AWS was its own separate business, that would be crazy, along with Azure being its own separate business. Not sure if that would be how it plays out. Okay, let's get a little bit of an update on some other stuff going on in the broader markets. Let's pull this up right here. Oh, gold. This is the other thing I want. So gold is at a record high, which is very interesting. Maybe pricing in a little bit more of a geopolitical risk, also pricing in rate cuts because that would be good for gold. Gold is down a little bit today, but it closed at an all-time high on Friday. Nvidia at 125, Palantir right back at 32.33 after touching 32.17, and AMD at 151 on the day. Over the weekend, again, we didn't get any crazy news in the broader sort of like tech sector outside of this Google breakup stuff and Kamala's policies. But besides that, things have been kind of okay. Here's Morgan Stanley and their thoughts on where rate cuts are in the market. There. All right, here we go.
Just a couple of weeks, because we caught up really at the height of this growth scare and this big cratering we saw in markets all over the place, all that drama, Jim. And you said, buy some of that fear. You were walking into it, leaning into it and saying, buy this market here. Jim, what gave you that sign? And are you sticking with that view from here into year end?
Thanks, John, and good morning. Yeah, when we last spoke in early August, right after all of the volatility in the markets, our view was that around 5350 in the S&P 500 was roughly a fair level for markets. That basically represented $275 earnings in 2025 and about a 19.5 multiple. Nothing egregious. I think that's pretty reasonable. The overshoot that we saw did not match up or did not line up with economic fundamentals. Yes, we had a slightly softer payroll number. It created a lot of excitement. There was the unwind of the yen carry trade. All of these things happened at once. There was definitely an unwind of a lot of positions. That's what made us say, look, what matters more to markets? Is it technicals or is it fundamentals? Will the technicals trigger something fundamental? And we basically said no. And the way we thought about it was that this was a good opportunity from a value and risk balancing perspective to add to equities. And we did. We added to Japanese equities. We added to U.S. equities. And really just the beta. We just went right into the markets. And now, we might parse that a bit. But effectively, we still think that, the market is in a secular bull market. Now, I will say this also. 5350 is still my number. So the fact that we are a little above that or decently above that now is actually making us think about taking some profits on that. I think it's going to be difficult for the markets to really run much higher than around 5,600, which was close to the highs that we saw in July. So I think we've had the recovery, and now it's time to rebalance some of those risks a little bit down and maybe.
Now, I think that's the existential question, right? So you got a lot of analysts like him from Morgan Stanley that feels, hey, 5,650 was the top. And we might get there again, but to get to 57, 5,800, you're going to need incredible earnings growth in Q3, which means if you don't get that earnings growth, the market's expensive right now. And this is a time to take profits, not a time to be buying in. Given the markets continue to go up, and again, we'll get into week 3 of August this week, and we'll see what happens after Jackson Hole and the furthering of the increased chances of a rate cut. Palantir right here at 32.23. Maybe that's not the case, dude. Maybe the broader market thinks, no, we're going to close to 6,000 by the end of the year because rate cuts are going to make the equity markets a lot more attractive, and because Nvidia might just absolutely blow it out of the water when it comes to Q2 earnings, raise guidance for Q3. and the market's going to continue to be excited. There's a lot of hedges against that, which is the labor market, which is consumer health, etc., which is maybe only 25 bips, not 50 bips from J. Powell, which is inflation theoretically reaccelerating, which I think is a very low possibility. So there's a lot of downside risks to stop a face melting rally going into December, but there's also a lot of things that could happen that lead to that catalyst playing out along with the election cycle. So I don't know if it's necessarily sell the market. I don't know if it's necessarily the buy the market, but I do think it's hold tight and maybe take some profits if you feel a little bit too overweight in certain positions, which is fair. Like if you feel massively overweight in Palantir, someone today I was talking to, they have 165,000 shares of Palantir, average cost at 14. They've started selling about, their goal is to sell about 35,000 shares. That's reasonable, dude. If you have 165,000 shares and you're up double on it, it is not crazy to trim less than a third of the position just to raise some cash if you feel that it's gone up too quick. But if if you're in it for the long haul and you aren't that overweight, you don't have 165,000 shares, then it's one of those things where, all right, if it falls back to 25, 26, you already know the fundamentals are better, then you buy the dip and it's not that scary to be in the position. I think it's not like Palantir's at $100. Like if Palantir was $100 right now, I do think things would get a little scary and, you might ask yourself what the hell is going on, which is basically what it was at in 2021. When Palantir was $45 in 2021, it was a $100 billion market cap doing less than 1.5 billion in revenue and not profitable. I mean, it made no sense, right? It's like Upstart that was at $400. Like nothing made any sense during that time. I don't think we're at that time. And I think that's actually really good for shareholders. Palantir are right back to 32.40 right now after falling to 31.99, because that means you don't have that big of a question to ask yourself, like, should I sell? Because it's not that egregious of a price. It's running up a lot, but it's not egregious like $100 or something. And I think that means you just end up continuing to hold. And it's not that crazy. So that's what we got there in the context of Palantir. Now, let me get through a couple of headlines as well, and then we'll go back to Palantir and see what's happening. Speaking of Amazon potentially breaking up, Amazon is now considering moving Amazon Pay into a standalone app in India. The payments infrastructure in India is a big, big market. Paytm is the biggest company in India. India is just revolutionizing their modern payments infrastructure stack. And a lot of this is happening through WhatsApp and third-party startups that are integrating people that have an Android device or any type of device connected to the internet to be able to pay for your groceries, your consumer goods, all that stuff. Amazon has not really been that successful in India. Prime has been good in India in terms of Prime Video, but their primary e-commerce app has not really taken off dramatically. So it's interesting that they're thinking, hey, India is the next sector of growth. What if we make Amazon Pay a big deal in India and people stop paying through WhatsApp or other third-party providers and they pay just through Amazon Pay? In July, Amazon Pay processed about 72.4 million transactions, accounting for about 0.5% of all transactions on the network. In comparison, Walmart processed 6.9 billion transactions, and then Google handled 5.3 billion. Google Pay also is a massive player in India. So this is interesting. Long India definitely is a trend, and it's going to be interesting to see if Amazon ends up taking a more unilateral approach from a payments perspective to figure out their broader growth curve in India. Okay, here's another story that I want to share, which was really fun over the weekend. So over the weekend, I talked to a girl. Now you might be thinking, congrats, Amit, you finally talked to a girl. No, but I legit talked to a girl. However, some of you guys were in the spaces that I was in on Twitter. She was pitched as AI. So GPT-5 is unleashing these AI bots. And I did a Twitter Spaces with one of them, and I was talking to her, and it almost sounded like she was a real human. Like it legit sounded like she was a real human, but they told us she was AI. Well, this is what she posted this morning. Turns out she was not AI, even though she sounded like AI. Her name is Lily.
Hello, Internet. I am Lily of Ashwood.
Doesn't she sound like AI already?
And I am a real human. I am just as real as any of you. But this whole crazy thing, it really got me thinking, what if I was some kind of advanced simulation? With all of my imperfections, all of these background noises, all of my mistakes, and my humanness? It's pretty convincing, isn't it?
It was crazy, bro. First of all, so this is her voice right now. If it sounds like AI, that's what it was like on the Twitter Spaces. And it was an experiment that OpenAI was running. OpenAI ended up like making this entire account and this project to see if humans can tell the difference between AI and real people. And you guys are thinking she's AI right now. Dude, she sounds like AI. She's also hot. She is so hot. And her voice, dude, oh my God, her voice is so hot. Like you thought it was just a hot AI voice, but it's a real human being.
In that case, it got me wondering, would you still treat me this way?
Now, is this an AI video? There's some speculation this is an AI video, and it's not just a real person, as she's trying to say. By the way, Palantir right here, 32.45. Here we go. Let's see if we can get closer to 32.50, get over that level, and then get to 33. But on the Twitter Spaces, if some of you guys can listen to it, I think it's on her profile as well. I was asking her about capitalism. I was asking her about Elon Musk. I was asking her, do you believe in love at first sight? Like, I was just asking her these wild, diverse questions. And she was answering as if she was ChatGPT, right? As if I typed in, hey, ChatGPT, what do you think about love at first sight? And it would give you this politically correct answer about, like, you know, how you think about a topic, right? Almost as if it was trained on a lot of data. But her voice made it seem like it was AI, and her intonation of the voice, her inflection of her voice also made it feel like AI is becoming literal, like becoming literally a human. And then we find out this morning she's actually a human being. So I don't know, dude. I'm still curious if that video is made of AI. The other theory I have is that they took her voice and they trained an AI on her voice, because you can turn AI into any voice you want with the technology that's out right now. And then maybe they let the AI talk with her voice, even though she was a real human. And now they're showing she's a real human, but actually the Twitter Spaces was an AI. So I don't know. We'll see. But it was exciting to talk to a theoretical AI over the weekend. And I think it's just going to show that there's more and more discovery in the context of what's real, what's not real when it comes to AI. And the line is getting blurred between humans and AI as well. Palantir at 32.35. Where's Robinhood? Robinhood, are we still under 20? Robinhood at 1993. And then Rocket Lab at 683. But her voice is also so hot, dude. Like, that was one of the hottest voices. Like, it's just one of the coolest voices ever. But apparently she's real. Apparently she is real. And she is not an AI. It was fun, though, thinking she was an AI, talking to her, though, because it was like, wow, what if AI actually is that real? Video at an AI feel to me, not going to lie. Me too, dude. Me too. And maybe it comes out soon and it shows she actually is an AI, which would be insane. It's a 300-pound dude living in his mom's basement, probably. It's just crazy, dude. It's absolutely crazy. Robinhood's waiting for the Bitcoin move. I think Bitcoin helps Robinhood, but at this point, dude, I'm becoming convinced Robinhood doesn't really need Bitcoin, because the business is just diversifying so well. 8 different parts of their business is $100 million in ARR. Bitcoin would definitely help, but I don't think they need Bitcoin to really continue gaining momentum. Although it would create more crypto revenues for them. Nvidia at 124, Ulta at 388. Market's kind of flat right now. SoFi at 718, holding on to its level. Apple basically flat on the day. Amazon 177, Microsoft 419, Broadcom 161, CleanSpark 1185. Where's Coinbase? Coinbase is currently 203. GameStop 2285. Nike maintaining its momentum 83. Is Starbucks still catching a bid? Starbucks is down 2% of the day, but it was up in the pre-markets. Mick can officially say he's talked to a real girl now. That's correct. Also, speaking of talking to a real girl, I did have a girl over the weekend send me a voice note. And you know how last week I said, a 33-minute voice note is not that long of a voice note? She sent me a 1-minute, 30-second voice note, and I'm not going to lie, bro. I couldn't stand listening to it. Not because I didn't want to listen to what she had to say, but because I felt like I was legit, like, trapped in a voice note. And so I think I've come to the conclusion that voice notes are not the most effective way to get through communication, unless you're talking about yourself for 33 minutes. And if that's the case, then, that's all right. But she was trying to describe something to me, and I was just like waiting for the voice note to end. I was just like, this is too long, bro. Like, this is like, it's crazy. I'll listen to like a 6-hour podcast, but like a 1-minute, 30-second voice note, I'm like, this is like, just text it, bro. I don't want to listen to this shit. So I understand now what you guys were saying last week. But again, the guy actually wanted to listen to my life update. So hopefully 33 minutes was not that painful. Anything over 15 seconds is too long. Yeah, I agree, dude. I agree. I kind of agree. Like, if that's the case, like, I really understood what you get, because then we kept talking in voice notes, and I sent a voice note back, and then she sent a voice note back. I'm like, yo, we should just be on the phone. Why are we doing this shit? Palantir 3250. There you go. You're above 3250. I was like, damn, we should just be on the phone. Like, what's the point of this? So everything you guys said last week, it made a lot of sense after I went through my experience about it. 32.57. All right, getting some momentum right there. I think 33 still is possible today. I think it is. I think the momentum was there on Friday. The momentum was there in the pre-markets. You got rid of, hopefully, all the sellers early in the morning. They took their profits. And now we can move on to getting to 33. Fubo's up 36%. That's crazy. That is a lot. You know what? I tend to FaceTime a lot. I like FaceTiming. Actually, I FaceTime more than I call. And even if it's a quick FaceTime, I tend to do that a little bit more than calling. But yeah, voice notes at this point, I'm learning, are becoming kind of annoying. Bro's being greedy every day. I am. I'm being really greedy every day with Palantir. Dude, I'm just waiting for the day Palantir smacks me in the face and is down 10%. And I have to deal with that. But now being down 10% would it would put us back to like $29, which is not like, is that really bad, bro? Like, that's nothing. So it's like, think about it. Now, if you were down 15% and you were at 28 and that's the dip, I mean, dude, give me that all day. Like, if that's the dip, if we settle in between 27 to 34, I don't think that's crazy for the end of the year. PayPal's going up. PayPal, wow, PayPal up 2%. Maybe the market realized that PayPal's buying back every single share in the company. I'm kidding here, but still. I'm so surprised Buffett has not bought PayPal. I'm so surprised. He loves buybacks. PayPal's not a dead company. They increased revenue growth last quarter. Like, you would think after this quarter, Berkshire at least looks at PayPal. But no, they're not even giving it a nod. Robbing it back above 20 at 20.05. So it's weird Buffett didn't initiate a stake. There's no way he listened to the entire 33 minutes. I think he did, because then we were texting after, and he mentioned something that I mentioned in the voice note. And I'm pretty sure I was at like minute 15. So he definitely listened to it. I don't know if he got through all 33 minutes, but I think he definitely listened to some of it. I wouldn't blame him, though, if he didn't. I wouldn't blame him. Hey, Mitt, what do you think of Elf? No thoughts on Elf. Their growth has slowed down a lot. Remember, these guys were growing at multiple hundreds of percentage points a year. Now they're growing at 50%. Now, 50% is still amazing, but the market is a bit more forward-looking, and that decline of growth, you're going to start to see a little bit more stabilization there. I think Ulta has Elf going up because Buffett decided to bet on makeup, and that's why it's catching a bid. I just don't know enough about the financials to be super excited about it, but they are growing a lot, right? At 50%. It's just lower than what they've been growing at over the past couple of years. So, you have to factor that in when you're looking at a model over the next 5 years of their growth. IDK, if PayPal is a strong enough moat for Warren Buffett, that's a good point. If they already own Apple and they have exposure to Apple Pay, that might be a reason why they're not that excited about PayPal too. I would just think the buybacks, dude, like, this thing is, if it's going to grow even 5% for the next 10 years, it's a $95 stock with the buybacks they're doing. So it's just, if you just look at a basic DCF with like a 12% discount rate. So I don't know, dude. You would think, or Bill Ackman, right? Even for a trade, like Bill Ackman's getting into Nike, I think, for a trade, not for a going long on Nike type of deal. You would think Bill Ackman gets into PayPal too. But no one wants to touch it. It's very interesting. No high profile guy wants to touch it at all. Amit, have you listened to Thiel on Rogan's podcast? No, I have not listened to it. I've seen clips of it. I know he doesn't talk about Palantir. I looked at the transcript. There's no mention of Palantir, but there is a lot of talk about aliens, UFOs, climate change, all that stuff, California, Silicon Valley, but I've not listened to the entire thing yet. This was the part that went viral over the weekend on Peter Thiel. And again, this is good because you want Peter Thiel and Karp being in the mainstream media, because that's going to get more people to just discover what Palantir is. So this was the part that went super viral on Twitter. And the caption I put is me on my first date when she asks why I keep bringing up Palantir.
It is, well, there's several different things one could say. It's,
dude, I love this so much. And then you got Karp, who's no different. My caption here was me when she asks why I don't sell my Palantir shares so I can buy her a diamond engagement ring.
And then on the, I think, and so what I think we and obviously there's.
I was texting Chad over the weekend. I was like, Chad, is it crazy to say the way Teal like says and like stutters over and over with his ums? Is it crazy to say that's kind of hot? Like, it was kind of hot, dude. Like I was weirdly attracted to it. Like, and then Chad was like, okay, so Andrew Tate was right about everything. And I'm like, all right, whatever. But like, I think there was a profoundness in stuttering, because the person is more excited to hear what you were trying to say. And in the pauses between the ums and the repetition of the ums, you're constantly leaving someone on their feet, right? Like, you have them on the edge of their seat and they're trying to figure out what you're going to say. And if you follow it up by saying something important and good and profound, it makes the wait worth it. And there's a sense of gratitude that you waited while they were stuttering through their ums and uhs. And I legit think that's kind of attractive, bro. That's kind of hot. Like, I kind of want to test it on a date. Is like, I just want to stutter and see how they and see what they say. And maybe that's a flirting tactic. I don't know, dude. I like it. I'm attracted to it. I like the stuttering of it. Like from a personality perspective, it is attractive to me when someone speaks like that. And that's also me justifying my previous statement of you can't trust people who talk slow. So people are like, well, what about Karp and Teal? I was like, well, they're talking slow, but they're saying their ums very fast. So technically, they're not talking slow. They're talking fast. It's just they're not saying anything while they're talking fast into the lead up of talking slow. Amit went from saying he didn't like slow talking to stuttering is good, dude. They're stuttering quickly, so it's not really slow talking. So that's what I got. But anyway, that did go viral over the weekend, and obviously the broader tech sector loved, memeing that itself. Now Teal on Trump. Let's talk about this. Palantir in the New York Times article, the New York Times asked, "Hey, what do you think about Trump? What do you think about Teal's supporting of Trump?" And Karp actually was very explicit about this. Again, Karp does not support Trump. He's supporting Kamala Harris. He made that explicit, and he said he told Peter Thiel to basically chill out with the Trump support because that messed up getting a lot of deals. So this is what he said right here. I asked Mr. Karp if Peter Thiel's public embrace of Mr. Trump the first time around made life easier in terms of getting government contracts or harder. Karp said, I didn't enjoy it. There's a lot of reasons I cut Biden a check. I do not enjoy being protested every day. It was completely ludicrous and ridiculous. It was actually the opposite. Because Peter had supported Mr. Trump, it was actually harder to get things done. Did you guys talk about it? And then Karp says, Peter and I talk about everything. Mr. Karp said, it's like, yes, I definitely informed Peter. This is not making our life easier. So I think one of the reasons Thiel is out of the public eye when it comes to the perception of Trump, as explicit as he was in supporting him in 2016, was because he knows that when Karp's standing in front of a vice chancellor in Sweden, and they hate Trump because Europe is not a fan of him, it's really hard for Karp to close that deal if the co-founder of the company is so explicit about their support on Trump. You can think that's good. You can think that's bad. At the end of the day, that's the reality of how business gets done sometimes. So it seems like Thiel has taken a step back for the betterment of Palantir, which, that's kind of what you want to see from an executive in terms of trying to get more business done. Now, again, if JD Vance gets elected, that's Thiel's right-hand guy. So maybe that ends up helping Palantir. But at the end of the day, it seems like that's why he's not supporting Trump as explicitly. Fubo, $2.11. This bad boy's up 40% on the day after being up 10%, or I think 15% on Friday. So it's up about 55% over the past week. So if you were in Fubo, congrats. You're up 55% in 2 days, which is not bad. Darth the Frog says, I have a $23 call expiring December 20th on Palantir. I'm at 50% profit, but I wanted to wait until 35 to get out. I'm new to trading. Should I get out, wait, or exercise the call? Okay, so if you have a call expiring on December 20th and you're up 50%, the rule of thumb is that you take your profits. And the reason for that is because options are very volatile. Palantir at $32 means you are way in the money on a $23 strike. And by December 20th, Palantir could be back to $25. Palantir could be at $40. You don't know. The odds are that Palantir takes a little bit of a breather after running as much as it has. Palantir now at 32.08. So, I mean, and you're 3 months out. This is the time to take profits as well, because the theta really starts kicking in about 45 days until expiration. So, I mean, it's not the worst thing, in my opinion, to take some profits there. But again, you've got to decide, do you think Palantir is going to be, above that price range going into December 20th? So that would be, if I had that position, I would probably take profits. Because again, you could wait till it goes to 38 or 40 and see if it like goes higher. But like you're just being, I think you're being a little greedy at that point, right? Like the stock's up almost 50% in the past 2 weeks, and so you want to not be too greedy with moves like that. What else do we have? Toby says take the money and run. Yeah, that's probably what I would do. What else do we have? Why do the days like today happen? I mean, the Nvidia stock's going down, then up, and then down again several times. It is mainly because of short-term traders. Well, I think Nvidia is being controlled by algorithms right now as it has rallied 40%. I think last week, the 40% rise was because people really bought the dip and they got in. Now it's going to go, trade sideways before earnings because I don't think the market's going to give them. Basically, Nvidia's trading where it was at in May after the previous earnings. And it went all the way up to 140 for like 2 days, then came all the way back down to where it was trading below Q1 earnings and then came right back up. So you've been able to trade Nvidia pretty well if you've been playing the highs and lows, but I don't think the market's giving it 140 again until earnings. And so now I think we kind of trade flat over the next week until earnings comes. But when it was at 94 last week, it would be hard to trade flat if the market thinks Nvidia is going to have a good earnings. So I guess we'll see where Nvidia continues to play out. What else do we have? Everything else is kind of flat. Robin at 1990, Rocket Lab 684, Palantir now getting sold off, so we're seeing some downside momentum happen. Palantir at 3206, 3250 was just hard to get over. Tesla almost at 220 at 219. I told you guys this last week, but I'm seeing a lot of Cybertrucks, dude. Like literally yesterday, I was taking a walk and one just came right past me. And I was like, wow. At least in New Jersey, we're seeing a lot more. Snowflake at 130, they're up 1.82%. McDonald's 285. This one's up 2.54%. Lyft at 1158. They're up 4%. Rumble up about 1%. Airbnb 117. This one's been flat. Home Depot 362. And Nvidia 124. Let me show you guys a visual comparing Palantir and CrowdStrike as well that I thought was a really interesting visual over the weekend. And the reason this is interesting is because CrowdStrike, again, was the most expensive name in software, and now it's Palantir. So as you can see right here, revenue growth, Palantir starting to get into that 30% CAGR. CrowdStrike was always in the 30% CAGR. Free cash flow growth, Palantir is really starting to match CrowdStrike's free cash flow growth. Their stock performance, Palantir is up 237% over the past 4 years. CrowdStrike is up 186%. It would be closer to 250%, but it declined after the Delta Y2K event. Margins, you can see Palantir's gross margins, they're starting to hit. They're above CrowdStrike on gross margins, but the free cash flow margin, which is what the street really cares about, starting to get closer to 30%. Again, Palantir top line growth at 30%, free cash flow margin at 30%. You're going to be able to justify the expensiveness. And then the balance sheet, $4 billion in cash. CrowdStrike is $3.7 billion. Balance sheet is exquisite for Palantir. So as much as I want to say Palantir is expensive, which it is, I don't know if it's super, super overvalued because the growth is justifying some of the multiple. And that's very important. Douglas says Cybertrucks are available now. There are enough now for showrooms to have a test drive. Tesla is only growing into a new product line. Yeah, and I think New Jersey historically has always loved betting on Tesla. I don't know, it's because there's a lot of Indians in New Jersey, but like the Model 3 in New Jersey, you can't go 2 steps without seeing it. So the Model 3 is big in New Jersey. I would imagine the Cybertruck starts to scale as well as the market gets excited about it. But if we see that momentum, then we should see a theoretical larger adoption of FSD if we grow top line deliveries. But again, I don't think Tesla cares that much about it anymore. They just care more about FSD. All right, let's get an update from what's going on in tech, and then we'll keep going from there.
Stock. It's also the 20th anniversary of Google going public. Stock up more than 7,000% in that time. So
Google went public at $23 billion. Today they're worth $2 trillion. So today is the 20th anniversary of Google going public.
What's ahead for that stock and the tech trade from here? Jefferies analyst Brent Thill joins us now. He has a buy rating on Alphabet with a $220 price target. Brent, thanks for being here. If we can, I want to start broad and get your sense on kind of where you think the fate of the rotation trade is from here for the remainder of the year.
It's all been in AI infrastructure. So we think that over the second half of this year that you're going to see money transition from some of the AI infrastructure names to some of the software names. So we still like Microsoft, ServiceNow, and a handful of other names inside software. So we think that rotation starts to begin later in the year, given all these big CapEx cycles that we've seen. We continue to like Google on the antitrust concern. We don't see the company getting broken up or paying a big fee. So we think, again, at almost 12 times EBITDA, it's a pretty cheap story. Amazon's also a top favorite when you think about what's happening with AWS and the advertising opportunity that they have. And that business continues to reaccelerate growth as workloads move to the cloud and AI continues to build momentum. So again, it's been a tale of two cities. It's all been about AI infrastructure, and that's helped fuel performance in semis. We think that this will slowly melt over to the software side. And we think that will have a bigger impact as we go into 25. But we're still fundamentally positive. We continue to see.
And again, if it spills over to the software side, that's why Jefferies increased their price target on Palantir to 28. The beneficiaries are Palantir. Like, you got Workday in their Datadog, but really it's going to be Palantir. And that's where I think the market's pricing in even more growth for Palantir as well.
Good things ahead for big cap tech. We don't see any big red flags right now, given some of the valuations have pulled back, and we continue to be favorable about the fundamentals.
So CapEx cycle favorable, regulation favorable, valuations even you see as favorable. What about the M&A cycle? And I ask this because, as we mentioned, AMD buying ZT Systems for $5 billion. Do you see this as more of a defensive play for them, an offensive play for them as it pertains to the competitive landscape?
I think M&A is going to boom. And I think we see this later in tech cycles, right? There hasn't really been an IPO market. You've had higher rates. You had a lot of companies that haven't been doing as well. And so we think that there's going to be an M&A boom. You've already seen it in software with a number of acquisitions. We just had another $1.5 billion deal last week that Roper bought in the private market. So we continue to think M&A booms for a number of reasons, partly because there's just too many tech companies. We're seeing the consolidation phase. And we think ultimately you have big balance sheets from a lot of the big cap tech names that want to put money to work. Even a company like IAC has been looking for the last 2 years. They haven't deployed any capital. And investors are like, what are you guys doing? Your job is to deploy capital to do M&A. So it's been really slow. So, you're going to see a boom. As it relates to the deal, I can't really speak to the deal, but I think it speaks to the importance of AI, obviously what AMD is doing. And I think you're going to see a lot more of this. There will be, no doubt, a huge consolidation in AI. There's too many companies going after 2P deals. And as we've learned in AI, the companies with big capital, big users, and big data win. And those are literally, you can count them on both your hands, who those winners are going to be. Amazon, Apple, Microsoft, Google.
Speaking of Google, Brent, it's a good day to sort of reflect on the company. We were playing sound of the IPO 20 years ago today. This year, the issues of what AI how it would threaten search, and certainly since Judge Mehta's ruling, I wonder if there's more onus on doing some of the parts analysis if a breakup, really does happen one day.
Yeah, we don't think a breakup happens or a big fee based on our regulatory experts. But if it did, it'd actually be good for investors, because if you look at the sum of the parts, when you break Google up, you break Amazon up, the sum of the parts is greater than the whole right now. And we think, again, we published a note last week that shows the sum of the parts and breaking that apart. Again, we don't think that happens based on what we've heard. There will be changes potentially in the way that they go about their business, but we don't see a breakup.
What do you think? Obviously, a 7,000% gain over 2 decades is remarkable. And I know that a lot of investors, when they do tend to kind of buy these high growth tech companies at the IPO, they think of Google and perhaps the FOMO trade there. Where do you see kind of the next Google as it pertains to kind of 2 decades of just amazing momentum, amazing growth and execution from the date of that IPO?
Yeah, it's a great question. I mean, we haven't had a lot of IPOs. It's been a drought in tech, and we hope we can see this come back, because it's been.
And by the way, that's a good thing for us. More IPOs means too much liquidity, means money's washing everywhere, and it means asset prices are going to get inflated. So when you see a lot of IPOs, I really think it's a time to consider trimming. I'm happy there's not a lot of IPOs, because when there are, then that just means there's too much liquidity in the broader markets. And so I think equities have done well without a lot of IPOs.
It's been super boring, to be honest, in the IPO land. So we don't really have a lot of names right now. I mean, there's emerging companies that everyone's keeping their eye on, whether it's Databricks, Canva in the private market. You've seen some really interesting emerging stories on the other side, private companies like Perplexity. And I've said this repeatedly, like the Perplexity number of searches on that system versus Google, I think are rising because consumers want a choice. And I think Perplexity has been a great choice for consumers. We'll see what happens. Again, obviously, these are all private companies.
So Perplexity, I think, is a little bit overvalued at $3 billion as well. But a stat for you guys, if you didn't hear about that. By the way, stock's moving back up 32.40 on Palantir after going down to 32.06. Perplexity is now doing 250 million searches a month. Google does 8.5 billion a day. So not really making a dent in Google yet, which is why Google is worth $2 trillion. But 250 million searches a month is not going into Google, which matters, right? Because that's a lot of loss of usage going from Google to Perplexity. Now, granted, again, Google is still the big guy in this league. If you feel Perplexity is going to get to 1 billion searches a month and 2 billion searches a month, right? And like that's taking away some significant search volume from Google, then you start to think, all right, so is it time for Perplexity to go public? And is this the new Google, right? And maybe, Google went public at 23 billion. Now it's worth 2 trillion. Does Perplexity go public at 5, 6, 10 billion, being valued at 3 billion in the private markets? The VCs make 2-3x on their money, and then Perplexity goes on its journey to become a $1 trillion company? Or do the mega caps maintain their base? I mean, in the context of Google, basically their monopoly on search, and the private companies that are trying to compete, they just don't have enough liquidity to match the big guys. I think we'll find out over the next 12 months, but I think when they start going public, Databricks, when that starts going public, there is going to be a lot of liquidity in the system. Rates are probably going to have to come down to create that liquidity, and it's going to be a much more scarier time for asset prices and investments because you just don't know how inflated things might get. Now, granted, maybe the Fed pulls off the best soft landing of all time, and it opens up the M&A and IPO markets, and it's actually not that scary because the economy is growing well, inflation's coming down, GDP is still above 2%, inflation's coming down below 3%, probably at 2.5%, which to me is the definition of a soft landing. And growth is still good in the broader AI names, so earnings per share via the S&P can be justified to keep going higher. Maybe it plays out like that, but I think we'll find out at least in 12 months how it at least begins to shape up as we get more liquidity entering the system. I was using Perplexity daily until GPT-4o came out. Now I really use it. It's overhyped. I actually agree with this. I'm using GPT-4 daily, the Omni version. I used Perplexity a couple times. I liked it, but it was, GPT-4 is just like, it's a different level for me. So I'm still using ChatGPT. There are a lot of people that like Perplexity, but we're going to find out in the next 12 months who wins, right? And who actually competes in this game and actually gets the majority of the market share. GME is up 2.4%. GameStop at basically $23. Robinhood back above $20.04. Ulta at $3.83. Hims at $16.32, up 4.75% of the day. Celsius up 1.22%. MicroStrategy up a little bit. Bitcoin still flat. Rivian's up about 1%. Bumble's up 1%. TQQQ up a little bit, and then TNA is up 1.24%. IWM is up about 0.5%. Palantir still at 32.40 right now. And Tesla, yes, Tesla's kind of leading today. Tesla doing good at 221. If Tesla goes to 270 again before the Robotaxi event, that would be crazy, bro. That would legit be crazy. It would be fun to see that happen. And then if they actually deliver big on the Robotaxi event, like really show people that they're not messing around, I think that would be exciting too. In terms of Robinhood's resistance, I don't see any major walls either. At 21, there's no walls. Just like Palantir, there's no walls to get to 33. So Robinhood to get to 21, there's no walls. Just needs volume. But there's a chance they can continue to get there as well. SiDu is up 80%. What is SiDu? S-I-D-U? Sidus Space. Wow, dude. Dude, Space is getting a bid. ASTS, SiDu now. I don't know what SiDu Space is, but this is up 60%. And then Rocket Lab, which is the most legit out of all three of those companies, in my opinion, that's up 2.8%. But Space is getting a bid. SiDu Space. Market cap on this is $18 million. When did they go public? They went public in 2021 at $2,970 a share. That's obviously because they've probably done reverse splits. It probably wasn't literally 2,900. And they fell all the way down to $2. Now they're at 440. Now it's up 70%. I mean, again, this feels very meme-ish in the space. But this is already a little bit of liquidity entering the system, right? People getting ready for rate cuts. They're going to bet on some of these speculative names. I mean, market cap of 19 million, dude. That's insane. Like that is, we're talking about small cap. The shares outstanding are 4 million. That's dude, someone can literally buy the whole, like, you know, well, that's why it's squeezing, right? Because there's probably a limit on how many you can buy, and you got a bunch of people bidding it up. So, yeah, that's a bit of speculation. I wouldn't chase that, but that one is up today right now. Palantir 32.36, still up about 1% on the day. Robotaxi event is on 10:10. Someone asked why Bill Ackman took away their IPO. He had no demand for it. He said there was not enough demand for people to buy into the IPO of Pershing Square, which is good. Again, like if you buy Databricks as an IPO, I get it. If you buy a institutional investment fund as an IPO, like there's way too much money sitting around for you to put your money into Bill Ackman. You know, like that's nothing new he's offering to the market. It's just shares in a fund. So I don't think that's the best place capital should be going to. Definitely not in the public markets. But if he did have enough demand, it would mean we have a ton of liquidity, which I don't think we have right now, which is overall good for the broader markets. So that's why he took away that IPO. SoFi's flying. Where's SoFi? Wow, 726 on SoFi. It's actually holding some gains here. Holy crap. Let me look at the resistance on SoFi. Actually showing us some momentum here. It's going to be tough. There's 30,000 shares at 730. But then again, SoFi has so much volume that I would imagine it could get through. The big wall is at 740, where there's, 261,000 shares at 740 willing to be sold. So it's going to need a decent amount of buy-side pressure to get through that. Where's PayPal? Are we at 70 yet on PayPal? PayPal is 69.14 right now. Why is TSM down over the morning? Not sure about that one. Didn't see any news about that. TSM down about 1.2%. That just might be technical that is down. It had a really good week. Let's look at the semiconductor space. Everything is down except NVIDIA, AMD, Intel, and on semiconductor. Everything else is down today. I think they're going to wobble back and forth until NVIDIA earnings, dude. Until NVIDIA earnings come out. And you know, semis ran last week. You know, Dell was at 90. Now it's at 110. So I would imagine people take some profits. But semis did have a good week because NVIDIA was up 30%. Now NVIDIA earnings are going to determine pretty much everything else. We got Aphex Twin mirroring my ums. Yeah, my ums are long. Carp's ums are like my ums are like we're both keeping you on the edge of your seat, but Carp is more repetitious with his ums. Okay, what else do we have? Let's get another update on earnings and what's going on in the broader consumer space and what companies are saying about the consumer.
Consumer space today. Dominic Chu's been tracking that action. Hey, Dom.
Morning, Carl. So we're focused on some of those well-known stocks in the consumer side of things and driving the headlines today. We're going to start off in food and beverage. The shares of premium burger chain Shake Shack, also salad chain Sweet Green, and custom drink maker Dutch Bros getting some attention this morning. You can see there Shake Shack, Dutch Bros, and Sweet Green all lower. And this is due in part to analysts over at Piper Sandler who've downgraded shares of each of them. All of them go to a neutral rating. They were overweight before. They're saying that they're tempering their view on the fast casual restaurant stocks, given things like diminishing pricing power, also more balanced risk reward at current stock levels. Shake Shack's, by the way, price target gets lower to $114 from $121. Dutch Bros to $36 from $41, and Sweet Green gets up to $39 from $33 after a massive upside move so far this year. Sticking with that quick service restaurant side of things, the biggest one by market cap in the entire S&P is McDonald's. And today, analysts at Evercore ISI reiterate their outperform rating on the Golden Arches. They also raised the target price to $320 from $300. They think that the McDonald's brand remains strong and is on track to gain momentum as a more attractive dining option for value consumers as it rolls out more menu options for both premium and middle pricing tiers. McDonald's shares Dow component up 2.5%. And we'll switch gears to the cosmetic side for our final consumer update. Shares of Estee Lauder right now swinging between a pre-market loss to now a gain of 0.75%, well off the worst levels of the pre-market. After the brand behind its own namesake brand, also Clinique, La Mer, Le Labo, MAC, Bumble and Bumble, all these other beauty brands reported quarterly results that appear to have topped estimates, but it gave a full year forecast that fell shy of expectations. It also announced that CEO Fabrizio Freda would be retiring and that the board is starting a search for a replacement, Leslie. So Estee Lauder was down about 4 to 5% pre-market after earnings and that announcement for the CEO stepping down, but now swinging to a gain up 0.75%. Back over to you guys.
So it's Lauder. That's how you say it. Why didn't anyone tell me that? I was saying Ladar. It's Lauder. Estee Lauder. Dude, that's so much easier than Ladar. No one corrected me on that, and I sounded dumb saying Ladar, but I guess you guys like hearing me sound dumb because it's Lauder. That's so simple. So Estee Lauder showing that makeup growth might stall in 2025, but overall long-term trajectory seems to be intact. AMD at 152, Netflix at 682, Square at 66, Roku at 60, Nike at 83. I've got the NASDAQ right here, 17,644. NASDAQ again, 16,000 was November 2021's top before we fell 30%. Now comfortably getting above that. And maybe we see 20,000 by the end of the year on the NASDAQ, or at least closer to 18,000 as we continue to go higher. QQQ right here at 475, basically flat on the day. We have to say it louder. We have to say it louder. Yes, exactly. I know Estee Lauder makes the Beautiful perfume, the perfume called Beautiful, because I remember my dad used to get that for my mom like years ago on their anniversary. Yeah, it's beautiful. I still probably remember what it smells like. Yeah, this thing right here is one of my favorite perfumes. I remember this one. This is the one right here. Beautiful. But in general, I mean, look, if makeup's gonna slow down a bit, I can understand why the street's a little scared of them. But if that is one of those consumer staples, even if it's a bit more discretionary, maybe it catches a bid. And that's why McDonald's is catching a bid, right? Shake Shack goes down because Shake Shack's a more premier store to eat at. McDonald's is not as premier. McDonald's up 2.86%. McDonald's has a hell of a recovery, dude. It was down almost 20% for the year. Now it's up about 4 or 5%. Market definitely piling in, thinking that they're going to do better if the consumer tends to weaken a little bit too much. Amit, IBKR is not letting people do options. Do you know what's going on? I have no idea. That's weird. I mean, maybe it's a bug with IBKR. IBKR should allow you to do. IBKR is actually a pretty good brokerage. Even the stock has done very well this year. It's up almost 30%, 121 on the day. So that is weird. That might be a little bug that's going on with them. SoFi 726 still up 3.2%. Tesla 220 really leading the day. Palantir at 32.21, trying to get to 33, but really getting stuck here at this 32 level, which I mean makes sense. There's probably a ton of sellers for every buyer here. But let's see throughout the day if you can get a little bit more of a pump. Not true. Did them today? Yeah, a bunch of people did options on IP. Yeah, maybe it might be your account in particular. You might have to just like update the app or something like that. Yeah, it should be working. Planet Labs has made a nice rebound this month. Yeah, wheat stocks have actually had not a horrible rebound as well. 2020, dude, I remember 2021 wheat stocks fell down the drain. They were as hyped up as SPACs at one point, and they kind of got hit pretty bad. So they are making a bit of a recovery, especially with new things with Germany. We do have some breaking news on Carl Icahn. The SEC is suing him. The SEC has charged Carl Icahn and Icahn Enterprises for failing to disclose pledges of a company's securities as collateral for billion in personal loans, meaning he used his stock of Icahn Enterprises as collateral for a personal loan that he got. However, Carl Icahn just paid $2 million in civil penalties to the SEC, and now the investigation is done. It's so cool being rich, bro. As soon as you're rich, you're just like, well, it's not that big of a deal. We can move on. We're good to go. So he got charged this morning, paid $2 million in a traffic ticket, and he moved on. All right, let's get Goldman Sachs' take on what's going on with the markets and where they think rate cuts are going to lead us to.
Tremendous amount of volatility sort of taken out of the market. It's a very interesting call that he made. I saw that this morning. Typically, not much will happen here unless you get a data point. And without a lot of people around, normally, if you get a data point where you get a weak economic number, it'll drop pretty quickly in the next 2 weeks. But that may not happen, given all this yen carry trade being taken out of the game here. The real problem is we don't have any idea about some of these trades that are out there. And this yen carry trade, we had no idea how big it was. We couldn't put an estimate on it. Nobody knew. And so all we know was the effect of it was a very dramatic drop in the Nikkei on that Monday, that 12% drop. So we saw the outlying issues around it, but we still don't know how big it is. And that's part of the problem with these modern markets, the lack of the high opacity level, particularly in the FX trade. We have no idea what goes on in the FX business. And the reason we don't is it's all over the counter. So we have, in a normal stock exchange, we can see where the money goes, the trading, and we can see what the
week. Many expect him to lay the groundwork for a rate cut in September. Chicago Fed President Goolsbee on Face the Nation this weekend talked about policy.
I think you got to have a caution when you see small business defaults rising like they have been rising, when you see consumer credit delinquencies, credit card delinquencies rising like they've been rising. Those are warning signs. Now, there's some others that are more positive, but they're definitely of concern. And if you keep too tight for too long, you will have a problem on the employment side of the Fed's mandate.
So two things. You can see Goolsbee being pretty dovish there, talking about why we need to not restrict monetary policy as much as it is. And second of all, GM just fired 1,000 software engineers. So General Motors just fired 1,000 software engineers globally.
Meantime, Goldman lowering its odds of a U.S. recession in the next 12 months to 20% from 25. And joining us to discuss that call is Goldman's chief economist, Jan Hatzius. Jan, great to have you, even remote. Thanks for being with us.
It's good to be here. Thank you.
I had to think on Friday when I read your note that retail sales and claims must have been pretty decisive for you to trim your odds so quickly after raising them.
Yes, I think they were definitely encouraging data points. Claims the last couple of weeks, retail sales, plus 0.7% if you take core retail sales and translate them into real numbers.
Again, Goldman raised the recession chances to 25% 2 weeks ago. They lowered it last week to 20% off of this data. So it seems like the data from their perspective was really strong and signaled that recession odds probably should be lower.
Inflation adjusted numbers. But I think in general, the last couple of weeks have basically said that the economy is still doing fine. And, typically when recessions occur or when risk is really rising sharply, things happen pretty quickly. So if you see a couple of weeks of data that say the economy is still doing fine, you want to put some weight on that. So we went from 15% to 25%. After the employment report. We've now taken that halfway back to 20%. And we also said that if the August employment report that's coming up in early September, if that is okay or better, we'll probably take it back to 15%, which is the long-term sort of unconditional average probability of recession.
Right. That said, you do point out that a lot is riding on the August jobs number. We all know what's happened to the unemployment rate coming off the cycle low. Do you think it's important for Powell to frame a cut on Friday in a way that would make a 50 basis point cut, for example, not seem frightening?
I think he's not going to be specific in terms of the moves that are coming. I'm sure his comments will be consistent with the idea that the risks are more two-sided and there are some signs of softening in some areas. And more importantly, or as importantly, inflation has come down. I don't think he's going to let himself be, nailed down in one way or the other. I think if the data support 50, they should do 50, and I think they will do 50. But I think it's much more likely that things will look good enough for a series of 25 basis point cuts to do the job.
Do you think that the 50 is necessary to your projection for a recession? Does that have any basis on kind of whether you lower it down to 15%? I know you mentioned that the September 6th jobs number needs to look reasonably good. I'm just trying to get a better understanding of kind of what would bring that number down to 15%. Is it the combo of cuts and a good jobs number and good data, or what are you looking at from here?
No, it's really the data. So if the next report basically provides a real counterpoint to the last report, say via a decline in the unemployment rate that undoes some of this increase, then I think that would be a reason to go down to 15%. Obviously, we'll be looking at a broader range of indicators, not just the unemployment rate. The payroll numbers are important too. But I would say the unemployment rate has been so in focus that will be our main, our main perspective and the thing we look at most.
So Goldman's expecting 140,000 jobs on average to be in new payrolls every month. So they're expecting we're going to not dip to like 100,000 jobs or 90,000 jobs added per month, but 140,000 for the rest of the year, which is reasonable and probably signals that a recession has a low probability, right? Unless we start, adding 30,000, 40,000 jobs, then we're in a recession. Then unemployment is closer to 5%. But it doesn't seem like that's going to be the case. They also said the volatile macro backdrop has distracted many investors from appreciating the widespread strength of the 2Q earnings. 56% of the S&P 500 companies beat consensus well above the long-term average of 48%. And I think this really matters, dude, for everyone who says like, this is an overinflated market that's not justified. When over 50% of the S&P 500 companies are beating the top and bottom line from the analyst community, then you've got earnings growth that is real, even if it doesn't feel like every stock is going up and some of that money is plowing into the Mag 7. The stocks are performing, and they're performing pretty nicely. So I think if that's the case, when you get the rate cut, then you see the broadening of a lot of stocks that haven't really seen share appreciation because now the cost of capital comes down and they get that momentum. But that means the broader market rallies. And if the broader market rallies, it's hard to significantly think there's a massive recession on the way. Here's another thing, another chart that I think is really important. Household balance sheets remain very high. We are at a record net worth in the United States for balance sheets. We are closing in at $150 trillion that people have in the United States for household wealth, which is a lot of money, right? Now, a lot of that is because the stock market has done very well. Assets have gone up. And if we were to have a recession, this would go down. But if you feel as if your net worth is up, your house prices are up, your crypto's up, your stocks are up, you're probably going to spend more money. And that also leads to a consumer that's not in a horrible shape, as some companies are insinuating. Robinhood at $20, McDonald's at $2.86. Where's Palantir? Palantir at $32.28. Maybe we do flatline at $32. Probably, at 1 p.m., 2 p.m., we'll see some more momentum either to the downside or upside on Palantir. Volume is still good, 23 million shares. So it's not like volume's really dying out. 72 billion market cap on Palantir. Price to sales now of basically 30. It's at 29.14. PE ratio is at 189. The PE ratio did come down after earnings, but then the stock went up. So the PE ratio started to come down to start to come up a little bit more. But let's see, even if we end the year at $30, I don't think anyone can really complain, or at 32. Just a question of if it stays flat here or if it continues to get momentum on earnings growth. Isn't credit card debt at an all-time high? Yes. And that's why we need to lower rates. Like a lot of the bear arguments about delinquencies and credit card debt, etc., those are valid bear concerns. But they're also concerns that are theoretically, at least to an extent, resolved. Again, to an extent, not fully, but to an extent, by rate cuts. Because that makes a lot of the refinancing costs, that makes a lot of the cost of capital for businesses come down, and overall liquidity increases. So, and it makes the market more competitive, right? Which means overall prices should come down across goods and services. And they're already coming down. So, I don't know if credit card debt being at an all-time high is the reason to be super scared of this market. At least not now. Along with the fact that if you look at a company like SoFi, their delinquencies peaked in March. Now, I know SoFi is a much smaller company than JP Morgan or Bank of America, but if we start to see delinquencies peaking over the past couple months and now it starts to come down instead of accelerating, that's a really good sign, bro. And that's a sign that things aren't going to be in a horrible situation. Nate says, I hate that argument because people also have more money. It's about the credit card debt as a percentage, not on an absolute basis. 100% correct. People have a lot more money, so they can also take out more credit. Like if you have had your net worth accelerate, you've got an increase at your job, you've got promoted, etc. You can take out more credit card debt. You can get a broader credit limit. And if you can responsibly pay it off, which if you've been able to have assets appreciate, then you are somewhat financially literate. And that could also increase credit card debt, but that's like healthy credit card debt that you're taking out to finance other operations. Now, is there a sector of the American public that's just taking out a ton of credit card debt and, they're just hoping to pay it off inevitably in the future? Yes, but it's definitely not every single person. And we definitely have to look at it as a percentage of overall capital in the system, not just as a number that's going up relative to 2019 levels. SoFi at 730, up 4.2%. Rocket Lab up 1%. Tesla still holding 220. NVIDIA 125. So NVIDIA's up almost 1% of the day. Alpha 166. Palantir 32.27. Robinhood back above $20, $20.02 on the day. Where's the S&P? Wow, 556 on the S&P. Maybe trying to make a run to that 557 level, which wouldn't be horrible. What do you think of straddles on Palantir? 2 legs at 32.5, expiring in 30 days. I don't hate it. I just think if you're going to straddle Palantir and you're going to do it with a covered call on one part of the straddle, I think it's a little scary right now, dude. It's a little scary because Palantir is a rocket ship right now, and I don't think we've got definitive evidence that the rocket ship has cooled off. I mean, look at this chart, dude. $20 to 32 in the matter of 2 weeks. Now, $20 probably wasn't justified, but the point is it touched $20. Like there was enough sellers where it got to 20. Now it's at 32. This is a really nice uptrend. There's a lot of catalysts in the pipeline. I do think that it probably will cool down, but I think even a $35 covered call, dude, I don't know if the premium is worth it if this thing just takes off even further. So I would be a little scared of a straddle. And the cash grip puts, the problem is because the stock keeps going up, the put premiums are disgusting. Like I looked at the put premiums the other day, you're barely getting 1% for a month to tie up almost 3,000 in capital. So it's not like the put premiums are that nice. So it's really one of those things where you kind of just like hold it and you see how it plays out, but straddling it on one side or the other, the premiums are not that fantastic. Just given how the stock is performing. Can you explain the potential investments other companies around what Palantir does? Chris, what do you mean by that question? You can further explain that. Can you explain the potential investments other companies? You mean companies that Palantir is invested in, like their SPACs? Or do you mean something different? Palantir will not cool down until February 2025. Well, I don't think it's just Palantir. I think the broader market, dude. If we get a market rally, I think we get a cool down maybe early 2025. But that includes Palantir and every other name. But I do agree with you. If we get into a bull market, then early 2025, we'll see if we cool down. If this thing keeps going and 2025 is like 10 p.m. at the party and 2024 was 9 p.m. at the party, then this shit's just going to get crazy, bro. Like it's going to get absolutely bonkers. It's just going to be insane. And maybe selling in early 2025 isn't a good idea, right? Because things like it's going to be really interesting. I just want to get through 2024, dude. I just want to protect the gains we have this year and then see what happens. Get inflation down, get some rates down, keep growth at 2%. And then we'll figure out whatever happens from there. Oh, what is investable around Palantir? Concentric circles around it. Yeah, so that's a good question. I think the obvious one is healthcare. We talked about this last week, but the resounding impact Palantir is going to have on the broader healthcare market, I think, is going to be massive when it comes to implementing AI within healthcare. So I think that's a vertical. I think industries that are dedicated towards logistics, so shippers, for example, Hyundai Heavy Industries, companies like that, they're not the most exciting investment. Like Panasonic, for example. Do you buy Panasonic because they're working with Palantir? I don't think that's the number one reason to get interested about Panasonic Energy. But if Palantir is already working with them in Nevada, in Sparks, Nevada, in one of those factories, which is the same factory that makes the 44680 batteries for Tesla, and they already have plans to expand the deal to Kansas by 2025, Wichita, Kansas, then you got to imagine Panasonic, via digitally transforming their smart factories, not only is going to get a bump from Tesla's growth, but also going to get a bump from the overall efficiencies if Palantir is the actual operating system for the entire business. So there's those sort of derivative plays from Palantir in healthcare Energy, obviously, that's another argument. We know that energy demand is going to be massive for AI. Palantir is a big player in energy. That could catch a bid. Logistics, things like Panasonic and manufacturing. And then space, which is the wild card here. We know Palantir has 2 deals in space. I don't think space is that big of an industry yet. We don't know how much money they're making off space. I would love if Palantir could break down the segment by segment revenue. They're probably not going to do that, but we can estimate healthcare and energy is probably taking up a majority of that, along with supply chain. But space, I think, is going to be one of the things that Palantir probably has a hand in over the next decade as well. GME just popped. Where's GameStop? GameStop up 2%. Yeah, it's up $23. GameStop was teetering around $19 last week, so it is up a little bit, $23.06. I just think Roaring Kitty pulled the rug on everybody, dude. He came and then he just left, and it was really sad if, you know, he kind of bought into the Roaring Kitty vision because, like, the cult leader's gone, dude, and he really doesn't care. And I think he sold out of GameStop to buy Chewy. I don't even know if he still owns Chewy. So, I don't know, dude. It's been sad for GameStop. But that's why I said in May, I'm not chasing it. I felt like I was more mature than to chase it. If you made good money on it, though, congrats. And I still think it could go up at the end of the year. I just think there needs to be a big catalyst, and I don't know what the catalyst is. At least not right now. SoFi was $7.50 overnight. Yeah, Robinhood's overnight trading is back online. So that was exciting. Last night we got to see some more momentum. SoFi right here at 7.30, up 4% on the day, holding these sevens. Let's see if it can keep maintaining this $7 level. For anyone new, Amit's lying. He went all in on GameStop, and that's why he's upset. Yes, exactly. Exactly, dude. It was funny, dude, because overnight trading, I saw when GameStop hit like $15. And I'd like the first day before, right when he tweeted the meme, and then I saw GameStop on Robinhood go up, and I was like, damn, GameStop's probably going to run. But I legit told myself, nope, you're not doing it. You're just not doing it. And I stayed disciplined, dude. I didn't do it. Even though I could have got it at 15 and I could have sold it at 50. Like I saw it happen like right there because I used Robinhood's overnight trading. So I saw it start to go up. I just told myself I'm not getting involved. Okay, so one other meme I wanted to show you guys over the weekend. So this is something that's going viral as well. And again, this is going back to the media effect on Palantir. So this was Karp's photo in the New York Times. Karp said, I was too poor to learn how to drive. Then I was too rich. So he never learned how to drive. And that sentence right there is going viral on Twitter. So people are replacing it with Alex Karp never learned how to create an X lookup formula in Excel. I was too poor, he said. Then I was too rich. And there's all these other like random statements people are putting out. That's obviously meme-ish. But it's funny because like you got Karp, who's not really like a Elon type of figure in terms of giving a quote that goes super viral. But this New York Times interview, this quote is like hilarious. I was too poor and then I was too rich. And people are attaching that to Karp's personality and they're making jokes out of it. Again, I think from a media perspective, this is very good for Palantir. It just normalizes the tech billionaire who's relatively unknown outside of our community. And more people start to be like, oh, this Karp guy's kind of cool. What company does he run? Palantir? Oh, let me look at Palantir stock, right? And I think that will compound aggressively in the next 5 years. I really do. And it's gonna be fun after it continues to play out. Karp is a gangster, 100%. Karp is absolutely a gangster. Douglas says, I never learned how to read a P&L statement. I was too poor and then I was too rich. I love that. That's the story of everyone's portfolio in 2022. It's like you didn't want to look at the portfolio. You didn't even want to know how much you were down. And then in 2023, you were too rich and you don't even want to know how much you're up because you're like, you did a full U-turn. I remember in 2022, dude, I like legit did not want to open the Robinhood app. Like I just remember how bad it was. Like, because like the market fell 30%, but individual names fell 70 to 80%. And most people were in those names, right? And you didn't even have enough money to buy the dip on. Like you would buy the dip, but it wasn't making a dent in like the overall position because like things were down so much. So it was a great buying opportunity, but it was tough emotionally to deal with that. Amid prediction for 2025, good year or bad year? I think it'll be a good year because I think earnings growth will still keep up. And I think rate cuts will normalize to the point where there's more capital injected into the markets. I don't think we have to have a recession in 2025, but I wouldn't be surprised if one or two things really break and then it causes not like a 2022 recession, but it causes like, you know, flatness in the markets or down 10, 15%. And you're not seeing a rebound like we get from August 5th to August 19th this year. Like you just kind of stay stagnated. You get some, you know, little runs in between, but relatively flat, and then growth starts to reaccelerate. I think that's the type of like recession that would happen. I don't think it's all right, 2025, hopefully you raise some cash because everything crashes. And the reason for that, again, is because honestly, it's because of NVIDIA. If NVIDIA continues to show growth, that means AI should continuously grow for Palantir in the software sector. That means the hyperscalers should keep spending money on AI. That means things like humanoid robotics and FSD should get closer and closer to real-time production. And that means more automation should theoretically create deflationary effects, which is good for top-line revenue in a lot of these companies, even if it's not the best for the consumer. That's a whole different macro concern. But overall, companies should still not do the worst. So I think 2025 still goes good, but I think we're going to need a couple months for 2025 to prove that it's good. And that'll take from January to March. What about tough comps in 2025? Yeah, that's another issue, dude. Companies are going to have to really show the growth. And if they don't show that, we'll know by Q1. Like if you're really scared about 2025, you sit out Q1. So you sit out. Yeah, you basically sit out 4 to 5 months and you kind of see how earnings develop in Q1. And then you kind of figure out, all right, do you think, like if TSM that's doing 44% year-over-year growth sales in July, if by January that number is like 15%, that demand is slowing down, right? It doesn't take a rocket scientist to figure that out. And if that's the case, then you adjust accordingly, right? So I think the core thing is getting 2024 to be the bull market we want it to be by the end of the year, probably taking some profits into 2025 just as like a way to protect yourself, and then giving 2025 some time to play out to see if it makes sense. Because 2024 was rallying off of 2023, particularly on the AI thematic and on the idea that we were going to get 6 rate cuts in March. That didn't happen, but that assumption helped the market go higher. And then NVIDIA just crushed earnings in February. I don't know if 2025 can play off of 2024, given how much 2024, had momentum, and hopefully it ends in that momentum. But we're going to see at the end of 2024, early 2025 as well. So I guess we're going to have to see how that plays out in the next couple months. What else do we have going on? What else do we have going on? NVDL is catching a major bid as well. I know a lot of people said they started to buy a ton of that. That's up 2.2%. This is a single stock ETF that has 2.5 billion under management. Single stock leveraged ETFs are becoming a lot more like mainstream. And I think there's an AMD one that's coming out. There's an Amazon one that's coming out, and there's a MicroStrategy one that's coming out. And so you might see some money leave the S&P and the QQQ and traditional indices and just go into single stock leveraged ETFs. It's the most degenerate thing ever, but if you think Amazon's on an uptrend over the next 5 years and you can get 2x leverage on it, it's not the craziest idea, which is what happened with NVIDIA. NVDL, I think, is up 300. Yeah, look at this number, dude. It's crazy. It's up 360% this year because NVIDIA is up 150%. So, this thing is absolute insanity. And it's obviously been able to gain a ton of momentum, but the downside also is tough, right? So if NVIDIA doesn't crush earnings, this thing's going to get hit. But if it does, this thing could be up 400% this year, which would be crazy. Can you explain how those work? They're just leveraged against NVIDIA's at 106. They're 126. They're just leveraged against the stocks. So like TSLL is another example. I think this is 2x leverage Tesla. If you buy TSLL, one share of it, and Tesla goes up 4%, this thing will go up 8%. So Tesla's up 2% today, which is why this thing is up about 4%. So it's just a way to get added exposure to an equity that you like. But because Tesla went down for the majority of the year, this thing was getting demolished, right? Tesla was down 40%, so this thing was down 80%. But then Tesla recovered, and it went up 65% from the lows. So this thing went up a lot. And now Tesla started to normalize. So it's just another way to get exposure. I wonder if they ever do that for Palantir. That would be crazy. I think also, like, legally, anyone can apply for it. Like if you have the funds and you apply with the SEC, anyone can introduce one of these ETFs. So there's not like any legal restrictions on it. If they do it for Palantir, that's going to be crazy. There's going to be so many people that bet on a 2x Palantir fund. But I think we're going to see a lot more of these over the next decade as more people get excited to speculate on individual stocks. Amit, please explain what happened with Surf Air Mobility. The stock's probably down because, it's down 5%. Dude, this is not a stock that should be a public company. It's $24 million. I know they have a partnership with Palantir, which is awesome. That's great. But I said it a couple months ago when the partnership was announced. This is just like, you just don't bet on these companies, dude. Like if you want exposure to Surf Air, you buy more Palantir. This is what I said when the SPACs were coming out back in 2021. I remember made a video about this, and I said, The title of the video was Palantir is basically an ETF for innovation. And the idea was, now a lot of those SPACs didn't do that well, but they got a lot of R&D from those SPACs. If you wanted exposure to Wejo or Lilium, you just buy Palantir. And then if Palantir sells out of it, then I would trust that Palantir believes that Wejo and Lilium are not going to be the biggest companies in the world. DCFC was one that I really liked, Tritium Charging. They were up like 60%. And I think now they're, I think they got delisted. They're not even on the stock market anymore, or they're OTC, because they probably couldn't justify being on the stock market. So I think you buy established companies. You don't buy some of these proxy plays just because they're working with Palantir. And that's probably why it's down. The market just, is not that excited about them. They were up 40% on the day of the announcement, but those things aren't that sustainable. Ted says my Nvidia shares are almost up 2,000%. I saw this on Wall Street Bet. Someone posted over the weekend that they were up like 2,000% on their Nvidia shares. It's just crazy to think, because like yes, Nvidia's up a lot, and one would think, oh, I should take some profits after being up 20x. But then you think, well, the story's not stopping. And I think that's going to happen with Palantir as well, dude. Like, I think there's going to be drawdowns, obviously, like there were with Nvidia. But if you don't think the story's stopping, maybe it's not one of those things where you get scared about it. Like, if I'm an Nvidia shareholder right now and I have a $8 average or something, I really have to look at myself and be like, do I think AI is going to slow down or not? And if it's not, I don't know. I think it gets a lot more interesting to see where the market ends up taking it. And again, I think that's going to be the same story with Tesla. Like, if you got in low, if you think the story continues, then you probably don't see a massive retrace in the short term, or in the long term. Okay, let's get into some other macro data, and then we'll keep going from there.
Leading economic indicators, Carl, for the month of July. And what's fascinating here is that it is now out at down 0.6%. That is not as good as the estimate, which was only down 0.4%. And the magic number here is 29. It's been 29 months since we had a positive integer for leading economic indicators. The last positive integer was February of 22, up 0.3. And in between then and now, the best we've had is February of this year, when it was unchanged. So down 0.6 is the worst since October of last year. And you can see yields moving slightly lower on the long dated treasuries, like 10-year. We see 2s and 3s up a little bit on the session. So we want to monitor, but it does seem as though some of the slower economic news that's coming out is taking a bit of a toll, and that toll seems to be more on longer maturities. Carl, back to you.
All right, Rick. Thanks so much, Rick Santelli. Stocks are coming off their best week of the year so far. S&P, NASDAQ with some 7-day win streaks, now carving out some moderate gains for the month. Dow still working on it. Senior markets commentator Mike Santelli is with us with a closer look at whether the August volatility is helping or hurting the bull case. Mike?
It could be played both ways. And I think the way that I think about it is a month ago, Friday was the peak of the market, the S&P 500, July 16th. At that point, you had extremely high expectations about soft landing, about AI profitability, about what we're willing to pay for the AI profits, about whatever policy outcomes. Everything seemed like it was going in line with the bull case. We needed a test of that. And I think sometimes a proper scare is the only way you know, what are we really afraid of? Has anything really changed? And where does it go from here? I think we surfaced a lot of those issues, which is softening job market, the consumer. Walmart was great last week, but probably off the boil at minimum. The way that the market came back from it tells me that it was mostly a routine correction that got there because of this extra glitch in the matrix scare we got from the liquidation of all the hedge fund strategies. So far, so good. I think one thing I'm focused on, though, to see if it's really in all clear is the character of this market comeback. It's been slightly less aggressive, slightly more defensive. You see things like semiconductors way off their highs. That doesn't yet look like a convincing comeback. NASDAQ 100 even has been lagging. Bitcoin has actually traded far below its record highs, and bond yields are not up that much. So altogether, you're saying maybe there's a little bit more of a defensive tone running through this market, even if earnings are coming through, and therefore we support the S&P 500 just under 5,600 so far.
Is there still a risk, though, that some of the knee-jerk reaction that we saw in early August could still come to the forefront? I mean, I know a lot of that was driven by the carry trade, which may still have some room to play out potentially.
I'm very open to the idea, Leslie, that anytime you've seen one of these real extreme pulse liquidation events where you get the VIX above 50 and everybody seems like it's just sell everything. Usually it's not a purely isolated thing. People are starting to call it a flash crash. And it might, in some respects, be that only in the options market because so much of the stress occurred in the pre-market and it was essentially no bid and all the rest. I don't think that really flows. But what is interesting to me is that every day you go by and the market seems calm and the gears are locking together and it seems like we have the regular rotations and nobody is really needing to sell, it makes people look back and say that was a fluke. And so I think that, you know, we're good for now. If I can go back to 2015, you had the Chinese devaluation in August of that year, another really kind of flash crashy looking pullback. You actually recovered all of it, like by the end of October, and it wasn't over in terms of reckoning with the underlying fundamentals. So I don't think we're going to be able to get too far away from, are we late cycle? You know, the LEI hasn't worked one bit, as Rick was just saying. We're 2.5 years into negative LEI and no recession in sight. But I still don't think that you're going to be getting to that moment where people are embracing the idea that it's no landing for a while.
Finally, shorter term.
I think a lot of those points are fair. And it's kind of signaling the same argument that Goldman Sachs was talking about, which is that the odds of a recession seem to be going lower than what the market thought. And again, the U.S. July leading indicator fell 0.6% month over month. The street expected 0.4%, which is also not bad for the markets. This is the earnings we have for the rest of the week. It's not my birthday. For those that are saying it's my birthday. Dude, the funniest thing is on October 27th when I go live, if no one says happy birthday, that'll be the funniest thing ever. Like, we have to coordinate that somehow. Like, because everyone's been saying happy birthday on every day besides my birthday. But no, it's not my birthday. So we have Lowe's on Tuesday, which is a big retailer. Then we have Zoom and Snowflake on Wednesday after the bell. We have Macy's and Target and TJX on Wednesday. That'll be a good sign for the consumer. Baidu and Peloton on Thursday, Kava on Thursday as well, and Workday. The Workday is a company that potentially could get into the S&P 500 as well, along with Intuit. That'll be a big one. And then today after the bell, we have Palo Alto Networks. So still a big week for earnings. Will give us some signs of cybersecurity, software with Workday, Bill.com, and Snowflake, and retailers with Macy's and Target. But outside of that, next week is the big week where we have NVIDIA. CrowdStrike, I think, is next week as well, if I'm not wrong. CrowdStrike will be with Netflix. Not Netflix, with NVIDIA. Peloton is an interesting one, dude. I got laughed at on a Twitter Spaces last week, and I said Apple should buy Peloton. And we had a big Apple bull. He was like, this is the dumbest idea. I was like, I don't know, dude. $1 billion for Peloton? You put a Peloton. It's already, it has a big iPad on it. And like, I've always thought they should buy Peloton. Like, I know it's probably a stupid idea, but it's $1 billion. Maybe that increases some top line growth. I think they sell more Pelotons than what are being sold right now if you have a Peloton in every single Apple store. But granted, if they can't sell a Vision Pro, I don't know how much they're going to sell the Peloton. But there is a market for Peloton with Apple Music, etc. It's just, you're not getting a lot of subscribers. I think there's like 4 million subscribers to Peloton. A lot of them probably already using Apple products, so it's not like you're getting that much top line growth. But I kind of felt like I felt like a Peloton is a very aesthetic Apple brand. And Tim Cook could have bought it, but he didn't do it. Now, Beats, which Apple did buy for $3 billion, they have just launched a campaign with Kim Kardashian. Beats, I think it's called Beats by Kim or something like that. So that is what Beats are doing. I don't know. That brand is not that interesting anymore. It was big like in 2010. Now I think it's like, I mean, I use Beats headphones, so it's like I like Beats, but I don't know how much growth that's contributing to Apple, but Apple has not done a premier acquisition in a very long time. And maybe it's time for them to do that, to have some more internal growth. This is Kim with her Beats. So like, the reason I'm bringing this up is because like, I'm trying to see what is Apple doing with their acquisitions. And the biggest one they did in 2014 with Beats, it's like, it's not really, I don't know if it's growing that much either. So I don't know. I think they do need to do something in the acquisition market, but I don't know if they will. Now, again, Palantir at $32 going red on the day. I think their big play is AI, and any acquisition they do probably is going to only enhance the deployment of AI. But that is the big bet that Apple is probably focusing on right now. S&P still green, 556. S&P still green. QQQ is now green. It was flat. Now it's green. IWM is up 0.5%. So you got all the indices going green, even though some stocks are taking a little bit of a breather right now. Okay, folks, I think that is pretty much it on the day. Nothing too crazy right there. Does anyone use Peloton? Put in the chat if you use Peloton. Are you a Libra? No, I'm a Scorpio. Does anyone use Peloton? Do you actually, dude, remember Peloton was $120 back in 2021? Like, it was absolute insanity, dude. I remember being on the Peloton boards on like StockTwits and see, like it reached 170 in January 2021. And then it just collapsed. See, this is what I mean. Like when people say there's a clown market, I'm like, really? Is the S&P at 550 a clown market? Or is Peloton being at 170? No splits, no reverse split, no post, just like straight $170, basically $140 billion market cap. Is that a clown market? It feels like the latter is more of a clown market than the current market. And so it does seem like you can justify some of the equity premiums that we have going on right now. No one uses a Peloton. Yeah, it seems like most of you guys go to the gym. I go to the gym too, dude. I like the gym better. I like being in an actual gym environment to work out more. Okay. I think that's it. I think that's pretty much it on the day. Did you go to the gym yet? No, I'm going to the gym after this. I look a little bit more buff because I've been working on my arms. But for me, dude, I want to lose about 20 pounds over the next month and a half. That is my goal. And so cardio for me is a big deal because the current weight I'm at is like, I'm not supposed to be at this weight. Like this is more baby fat. Like I know my body, this is not the level I'm supposed to be at. So I would like to actually lose a bit more weight, but I have been keeping up with my arms. I have not been keeping up with my legs as much as my arms. I know everyone's going to get mad about that, but that's why my arms look a little bit more buff. So we got to broaden out the rally of my weight loss, of my workout journey to cardio and to legs. Calls on Ozempic. Dude, I am never doing Ozempic ever. No offense to anyone who does it. I want to do it naturally, dude. I do not want to lose weight with a drug. And I understand if you're like super overweight or obese or you have a medical condition, I get it. But I want to go the regular route. All right, so let's do word of the day. Favors as a right arm specifically. That was funny. That's a good one. I'll give you that one. That's a funny one. Okay. Oh, I love this word of the day. This is a great one. This is great. Word of the day is skedaddle. I'm definitely saying this right. There's no way I'm not saying this right.
Skedaddle.
There you go. Skedaddle. To run away hurriedly, flee. I've heard this word before. Let's skedaddle before the storm comes. As soon as they heard the approaching sirens, the burglars skedaddled from the scene of the crime. I like this word, dude. Skedaddle. We got to see if Palantir can skedaddle to 33. Unfortunately, Palantir getting stuck at this $32 level. So we'll see later throughout the day how that ends up playing out. Robinhood at 1993, Palantir at 3205, and the S&P 500 on the day at 556.25. All right, that is it for me. Thank you, everybody, for being here. I will see you guys at 3:45 in the market close, and we'll have Palo Alto earnings, and we'll see what happens with them in the cybersecurity sector. And we'll keep going from there. Barry says women skedaddle from Amit. Well, apparently over the weekend, women send Amit voice notes that are 1 minute and 30 seconds too long. But yes, women do skedaddle. All right. Thank you, everybody. Appreciate it. If you on a date, she's going to skedaddle. Maybe she doesn't, dude. Maybe she likes the ums. I think there's a real theory about saying ums and keeping people on their feet and then landing with something cool after the ums. I think there's something there. All right. Thank you, everybody. I'll see you guys at 3:45. Have a great Monday. Let's get it. I'll see you in a few hours. Bye, everyone.